Okay. Good morning, Jeannie. Good morning, everyone. Good morning, Hemant. Good morning, Mamta, Usha, Anila, Shabbir, Usha. All good morning. Okay, Niranjan. Yeah. So, in the previous session, we started off with this standard Ind AS 21 that deals with your foreign currency effect of changes in foreign exchange rates. We have a corresponding standard in your ICAP regime also, that is your uh, AS11. So quite a number of principles are borrowed from AS11. So basically the fundamental thing that is different is that there is a new currency which is introduced, that is your functional currency. So functional currency is the currency of the primary economic environment in which the entity operates. So we saw numerous examples and we saw what factors do we evaluate when we determine the functional currency. In summary, the functional currency is the currency in which you pass the journal entries. So that is the fundamental thing to remember or to understand. So your pricing, your costing, your costs, employee related costs, all these items, how they are, which currency is impacting them, that will end up becoming your functional currency. Additionally, if you are unable to decide based on the primary factors, then you have certain secondary indicators also, like in what currency you are retaining the funds from operations, or in what currency are you having your financing. So those could be the secondary indicators of your functional currency. Basically, functional currency has to be determined. Okay, it's not a choice. You have to determine it, and you have to determine based on these indicators. It is a question of judgment. 99% of the cases, the domicile of the country, the domicile of the entity, that means where it is registered, where it is located, that only will become the functional currency. So we spent considerable time discussing this. Then we saw certain foreign currency transactions, some things which you are already aware of. I don't have to add anything to that. Okay. So we had closed our discussion at this point of time, if I am not wrong. Okay, so now we shall move on to the next set of concepts. I had left you with some homework questions, question number 5 of the study module and question number 4. Could you do this? Yes. Could you guys try out these homework questions? Everyone? No? Okay. But I will be others. Jeannie, what about you? Did you try? Monica? Okay, okay, okay. ठीक है. But what I will do is, I will still leave these two questions to you for homework only. I don't have anything to really add on that. Okay. So you can easily manage it out. I think it's not going to be difficult. Okay. I will do the difficult questions or the unfamiliar questions. So then that will at least ease out your concepts for the first two questions also. And then, we can continue with the remaining part of the standard. All right, fine. So we pick up this RTP question, which is also there in your test your knowledge. Yes. You guys have the option to speak, right? Because, okay. All right, fine. On 1st April 20X1, makers raised a long-term loan from foreign investors. The investors subscribed for 6 million foreign currency loan notes at par. It incurred incremental issue costs of foreign currency 2 lakhs. Interest of 6 lakhs is payable annually on 31st March, starting from 31st March X2. The loan is repayable in foreign currency on 31st March 20x7 at a premium. And the effective annual rate implicit in the loan is 12%. The appropriate measurement basis for this loan is amortized cost. So there are a couple of new terms you are looking at. One is your effective annual interest rate. One is your amortized cost. So have you heard these terms before? I'm just trying to see if I can unmute you guys, okay? So you can just put in your answers, okay? All right. Have you heard this terms amortized cost, effective annual interest rate? Because this is a part of your financial instruments chapter, but somewhere you would have read or something you would have heard about it. Any update? Okay, fine, no problem. So the appropriate measurement basis is the amortized cost. Relevant exchange rates are as follows. 1st April, one foreign currency equals 2.50, 31st March X2 2.75. Average rate for the year ended 31st March 20x2 is 2.42. The functional currency of the group is INR. What would be the appropriate accounting treatment for the foreign currency loan in the books of Makers Limited for the year X1, X2? Calculate the initial measurement amount for the loan, finance cost for the year, closing balance, and exchange gain or loss. Question looks to be long, but it is a very simple question. Okay.
Sir, amortization cost, that means the lease payment what we made, the lease table we amortized.
Okay. तो ठीक है अच्छा you are linking it to the lease Ind AS 116 ना
Yes, sir.
तो ये वो नहीं है दिस इज अ डिफरेंट मैकेनिज्म फॉर measuring your financial instrument. So we have fair value, we have amortized cost. In that you have your recognition as fair value through P&L, fair value through OCI. That depends on the business model, that depends on what are you measuring. In this case, we are measuring the liabilities and therefore amortized cost is the best way. Amortized cost is essentially what you rightly said, it's on similar lines. जैसे you have the opening liability, add the effective rate of interest minus the payment to give you the closing. So lease also you do something like that only, right? So it is kind of similar, but that is what amortized cost is all about. Okay.
You're talking about India's 32 or 109,
I'm
right?
talking about Ind AS 109. I'm talking about Ind AS 109 right now. Okay. ठीक है बट आपने पढ़ा नहीं दैट इज ओके आई अंडरस्टैंड दैट बट व्हाट आई थिंक वी कैन डू इज वी कैन रन थ्रू द सॉल्यूशन इट्स क्वाइट सिंपल we'll see whatever new things are going to come up उस हिसाब से we can understand and then anyways when you do your financial instruments you will get to know this in detail. Okay. Because of the interlinkages between the standards, it becomes what you can say. It's not easy कि सब करने के बाद हम दूसरे standard करेंगे because somewhere some standard is linked to some other standard. Okay, so it's just a matter of timing difference. That's it. Okay, so this is the question. So what we are seeing is there is a loan of 6 million. 6 million means 60 lakhs and there is an issue cost of 2 lakhs. So what Ind AS 109 requires is you will have to measure the loan at initial recognition net of the issue costs, net of your issue costs. Okay. So your loan value is 60 lakhs. Incremental issue cost is 2. So your opening balance for the loan will be 58 lakhs, which makes sense because you are having only 58 lakhs available for utilization. Okay. Now, they are initially, now what Ind AS 21 tells, I will recognize the foreign currency transactions at the rate of exchange in force when the transaction was first recognized. So when did I do the borrowing? I did the borrowing on 1st April. 1st April, my rate is 2.5 and therefore I will convert 58 lakhs using the currency of 2.5 to come to 1.45 crores. Is this part okay? Yes. यहाँ तक ठीक है? All right. ठीक है. Next one. Calculation of, okay, now we then move on to the next part, that is, ये तो हो गया opening. We did the opening recognition, initial recognition. Now the year progresses. When the year progresses, naturally the next item that will come is interest. They have given you something known as effective interest rate. They have given you something known as effective interest rate. Okay. The effective annual interest rate implicit in the loan is 12%. What is the meaning of effective annual interest rate? Is it different from the regular interest that the banks charge? Okay, see, normally I given, I have taken a loan worth how much? Bolo. What is the loan taken amount?
60 million.
6 million. That is 60.
Sorry, 60.
Okay. 60 lakhs or 6 million. You tell me one thing. Interest should be computed on 60 lakhs? Yes or no?
Yes, sir.
Ideally, your interest rate will be on 60 lakhs.
60 lakh.
Okay, what Ind AS 109 tells us, this is not your interest rate. This, they call it as coupon rate. Okay, coupon rate. Coupon rate is the rate at which you do a cash payment of some amount. Okay, suppose the coupon rate is 10%. Then your payout would be 6 lakhs per annum. I'm just giving a hypothetical example. But what Ind AS 109 tells is, sir, your rate of interest is not 10%. We have recognized the loan at what amount? 60 lakhs or 58 lakhs?
58 lakhs.
Ind AS 109 requires you to do the initial recognition of the loan at 58 lakhs. Okay. So I cannot apply 10% on 58 lakhs because 10% is for 60 lakhs. So therefore, I will do an effective interest rate calculation. And that effective interest rate calculation will build up this 58 lakhs to the amount that I expect to pay on maturity or redemption. Expect to pay on maturity or redemption. Are you able to understand? Yes? समझ में आ गया? Okay? Yes or no?
सर ये इंटरेस्ट रेट 10% है या
This is
12?
this is hypothetical. I told you this is hypothetical. Assumed. Okay.
Interest rate is 12%.
Interest rate is 12%. But that is which interest rate? That is effective annual interest rate implicit in the loan. Look at the words. When you do your financial instruments chapter, you will understand better. Okay, let me just explain to you. Okay, I will just do one thing. I'll just deviate a little bit from this example. And I mean, I will take the help of this example only and I will go ahead. So now, see, what you used to do earlier before Ind AS, loan 60 lakhs, processing fees 2 lakhs, correct? So what did I do in my financial statements? Bank account debit 60 lakhs to loan 60 lakhs. Then what you used to do? Incremental processing fees and all. Okay, so processing fees P&L debit to bank 2 lakhs. Correct? Do you recollect doing this? And then if rate of interest equals 10%, it is a big if. Okay. What you would do? Finance cost P&L debit 6 lakhs to bank. Yes. And finally, for redemption, you would do loan account debit to bank 60 lakhs. Do you remember doing this in your intermediate? Yes.
Yes, sir.
Okay. What Ind AS tells is, look, you have taken a borrowing of 60 lakhs. Okay, जरा ध्यान से सुनो, it's just a small deviation. You have taken a loan of 60 lakhs, but what is the available fund with you to utilize? What is the
58 lakhs.
58 lakhs? So the initial recognition of my loan will be at what value? 58 lakhs.
58 lakh.
58 lakhs. Okay. So what we do is bank account debit to loan 58 lakhs. Now, there are two things which are happening here. One is year on year, I will pay 6 lakhs in the form of coupons. Yes,
Yes, sir.
20% hai, that is computed on 60 lakhs. That is your coupon rate. We don't call it as the interest rate under your financial instruments chapter. That is some amount which we are paying as per the terms of the contract. But in my books, it is not the interest rate. Ultimately, what should happen is this 58 lakhs is building up to 60 lakhs. Yes or no? Because when you are going to do the settlement of the loan, will you pay only 58 lakhs?
No,
No, sir.
You will
lakhs.
pay 60. आपने 60 लिया है ना? So you
Yes.
will pay 60 lakhs. So
Plus
therefore,
interest.
one build-up is 58 to 60. Sir, we will take the hit in the last year in the P&L. Last year P&L में, we will be making the payment of, we will do loan account debit 58 to bank 60, P&L 2 lakhs. Institute says, or the standard says, this you cannot do because this 2 lakhs is effectively a cost that you are incurring over the tenure of the loan. समझ में आ गई बात? Yes?
Sir.
Did you understand? So this, suppose the tenure of the loan is 5 years. Suppose the tenure of the loan is 5 years. 58 inflow, 60 outflow. The 2 lakh incremental cost is not something which will hit in the last year only. It is something that gradually builds up. It is something that gradually builds up. Are you able to follow?
Yes, sir.
इतना समझ में आ रहा है? Yes, Hemant.
Yes, sir.
Okay, Pooja, are you able to follow? Yes. Niranjan, Mamta, Usha, Kishore. Yes. So there is a gradual build-up of this 2 lakhs. In addition to this, there is annual interest cost also. Yes or no? There is an
Yes,
annual interest cost. That annual interest cost, now don't talk about the coupon rate. That annual interest cost plus 2 lakhs build up. Can I say this put together is my effective finance cost?
yes, sir.
है ना?
Yes, sir.
And this effective finance cost is for a borrowing of how much? 60 lakhs or 58 lakhs?
58 lakh.
अभी 58 lakhs है because your effective borrowing is 58 lakhs. Are you able to follow?
Yes, sir.
And ये कैसे compute करना है? How do I do the calculation? How do I arrive at this? All this you will be studying in financial instruments chapter. ठीक है? But for your hint, I will just tell it is similar to the IRR method that you used to follow in capital budgeting in your financial management. थोड़ा सा उससे सिमिलर है. When you do financial instruments, you will be able to get this working. So that effective finance cost or effective interest rate in this question is 12%. Are we okay with this?
Yes, sir.
Yes,
Yes.
sir.
Okay. So with this background, let us come to the question. Okay. Now, I have recognized the loan at 58 lakhs, correct? On that, the interest is at the rate of 12%. The interest is at the rate of 12%. Okay. Now, okay. All right. Interest of FCY 6 lakhs is payable annually. What is this interest?
The coupon rate
Yes.
interest.
What is this 6 lakh 96? This 6 lakh 96 is your finance cost. This is the amount that will go to the P&L. Is it okay? And what is
Yes.
this 6 lakh? ये तो payment है. Okay, so what are the entries that you will pass in this case? Bank debit to loan 58 lakhs. Finance cost debit
To
to
bank.
loan or bank, normally to loan. Okay, 6
Yes.
lakh 96,000. This is not paid, this gets accrued. And then loan debit
To bank.
to bank 6 lakhs.
6 lakh.
This is how you are going to do the accounting treatment. Are you able to understand?
Yes, sir.
Yes.
Yes, sir.
तो इतना सा ही याद अभी समझ लो. When you do your financial instruments, you will get to know the complete logic behind this. Okay. So interest at 12% is a finance cost. This hits the P&L. Whereas cash flow is a cash outflow. That's it. And this becomes your closing liability. The finance cost would be, okay. So now coming to the overall picture, I have opening balance 58 lakhs. I have finance cost 6.96 lakhs. And I am having additionally payment 6 lakhs. Okay. So tell me, what all rates are we going to use for these items? And I have a closing balance of 58.96 lakhs. Okay. Chalo, tell me, what rates are we going to use for conversion?
सर लोन है तो लोन को तो हम लोग मॉनेटरी आइटम हो गया
That's
और
right. So when you take the loan, this will be the spot rate. Yes.
यस सर
Finance cost is a P&L item. So which
Yes,
rate
sir.
are we going to use?
क्लोजिंग रेट
Average rate, because that's a P&L item. Okay. It's over the entire tenure. So you typically take the average rate. Payment of 6 lakhs. This will again be the spot rate typically. And closing balance will be what? Closing rate. Are we able
क्लोजिंग
to
रेट
understand?
यस सर
ठीक
Yes,
है?
sir. Yes, sir.
Hemant, did you follow? Yes. All right. Mamta, Pooja, all in agreement? Yes.
Yes, sir.
ठीक है. Now, finance cost. So if I have to put
सर
it,
वन
yes,
मोर क्वेश्चन सर
बताइए.
ये जो फाइनेंस कॉस्ट है इट कैन बी गो इनटू ओसीआई राइट
No, at least not now. So far, not now. Okay, this will go only in the P&L. Okay, because
ओके
this is a borrowing that you are undertaking, so it has to hit the P&L. Okay.
एयरटेल ओनली ठीक है
Yes. Okay. So now let us start the foreign currency loan account. See, this is nothing but 58 lakhs multiplied by what is my opening rate? 2.5. You can check this. Okay. Check and confirm 58 lakhs into 2.5. Is it correct?
Yes, sir.
Okay.
Yes, sir.
Then finance cost I am incurring 6,96,000 into what is my average rate? 2.42. Can you check?
Yes, sir. Check.
Yes.
Okay, fine. And then we are having the payment of interest. This happens at the end of the financial year, payment of coupon. So this will be 6 lakhs into what is my 31st March rate? 2.7.
2.75.
Is it matching?
Yes, sir.
Yes, sir.
And closing balance is 58.96 lakhs into 2.7.
2.75.
Is it matching?
Yes, sir.
162,
Yes, sir.
14,000. So this will be your balancing figure, which is your exchange loss, 16,79,680. Are we able to understand?
Yes,
Yes.
sir.
Sir.
Yes, Pooja, did you follow?
Yes, sir. Yes. Yeah.
Mamta, Anila, Kishore, Hemant, yes, all right. So that takes care of this question. Okay. Mamta, hope you understood. Shabbir, Usha, Niranjan, hope you guys understood. Anila, hope you understood. Okay. All right. All right. Fine.
सर तो
Yes.
आपने जो अभी बताया अमोर्टाइज्ड कॉस्ट के रिलेटेड, तो
Yes.
उसके हिसाब से इसका जो क्लोजिंग बैलेंस निकला उसको हम अमोर्टाइज्ड कॉस्ट कह सकते हैं?
Yes. The method is amortized cost. Yeah, where did that go? See, ultimately, you prepare this table. You see this table, right?
यस सर.
Opening liability, interest, cash flow, closing. If you pull it for 5 years, each year
Okay.
you will have finance cost that will keep changing because closing balance keeps changing. You will pay 6 lakhs. Ultimately, it builds up to year 5 to 60 lakhs. And
Yes.
then you do the payment of 60 lakhs or whatever premium or something they said, you pay that premium. So ultimately, this 5-year table will show the entire life of the loan and how the balances are going to change. So that we call it as amortized cost. Even in leases, what you used to do, you would have opening lease liability, add interest cost of the lease liability, less whatever lease rentals that you would be paying to give you the closing balance of the liability. That would ultimately bring the lease liability to zero. We collect that, right? So that is exactly what is amortized cost. Okay. All right. Fine.
सर ये
Yes.
जो बैलेंस बचा जो आप ऊपर जाइए थोड़ा सा.
58 lakhs, sir.
नेक्स्ट पेपर.
Okay. इस पे
सर 16,79,680 का कह रहे थे
yes.
हम.
Yes.
सर हम इसका पूछ रहे थे, ये ओसीआई में भी जा सकता है? ये डिफरेंस ही तो है फाइनेंस एक्सचेंज.
This will go right now in the P&L because this is a monetary transaction. This is a transaction. This is not related to foreign currency entities or foreign currency subsidiaries, etc. I will be coming to that point where you are saying this can go to FCTR in another half an hour from now. Okay?
ओके.
Give me half an hour time. But right now, this is going to the P&L because this is a foreign currency transaction that the entity is entering into. So in today's terms, why does it go to the P&L and why not to the OCI? I will explain when I do that part. When I take that part, I will tell why this difference goes to OCI there. That time you will understand why it goes to the P&L here. Is it
ओके
okay?
सर.
Yes?
ओके सर. यस सर.
So this 6 lakh is not a principal payment, no?
6 lakh is a coupon payment. You can call it as a principal payment or you can just call it as a payout. So right now I understand where we are coming from. We are coming from the traditional background of calculating my loan, my interest, my payment. So right now don't get confused. This 6 lakh is just a payment against the accumulated balance. That's it. It's not the principal repayment. Is it okay?
Okay, sir.
Yes, बस उतना सा ही याद कर लो. You don't have to really break your head on this because Once you do your financial instruments, you will know this in detail. Okay, you will come to know this in detail. That time you will understand what is the 6 lakhs. As of now, you just know that it is payment against the accumulated loan balance. That's it. Okay, so that takes care of this question. All right. All right. Let us move on to the next one. All right, fine. This is again a nice one. Okay. An Indian entity whose functional currency is rupees purchases a USD denominated bond at its fair value of 1000 US dollars. The bond carries a stated interest at 4.7% on its face value. The said interest is received at the year end. The bond has a maturity period of 5 years and is redeemable at its face value of USD 1250. The fair value of the bond at the end of year 1 is USD 1060. The exchange rate on the date of transaction and at the end of year 1 are $1 equals 40 and 45 respectively. Weighted average is 42. The entity has determined that it is holding the bond as part of an investment portfolio whose objective is met both by holding the asset to collect contractual cash flows and selling the asset. The purchased USD bond is to be classified under the fair value through other comprehensive income category. The bond results in an effective interest rate of 10% per annum. Calculate gain or loss to be recognized in the P&L and other comprehensive income for year 1. Also pass a journal entry to recognize gain or loss on above. Round off the figures to the nearest rupees. Okay. Another question from financial instruments. First of all, you tell me, what is this instrument for the entity? Is it an asset or is it a liability?
Asset.
Okay. We are all confirmed on that. Hemant, everybody confirmed it is an asset. Yes. All right. Fine. Because that is the starting point. Okay. Now, what Ind AS 109 tries to do is, Ind AS 109 tries to understand what is your purpose behind making investments in financial instruments. See, normally, investment as a category can happen only for furtherance of operations. When I say furtherance of operations, it means either you do an investment in property, plant, equipment, or you invest in your subsidiaries, or you do capacity building, whatever you want. Generally, your traditional investments will go towards your business funding. So there it's not a problem. What Ind AS 109 tries to understand is, when you are making investments in bonds, in shares, without a controlling stake, when you are making investments in equity shares, when you are making investments in mutual funds, then what the standard tries to understand is, what is the intention behind making this investment? Is it to, sometimes companies will get, they have money and they park it in fixed deposits. They park it in fixed deposits. So what is the intention behind putting the money in fixed deposits? Is it to really gain interest? Is it to sell that fixed deposit at some point of time or the other? Why are you making investment in the market? As a company, do you want to get benefits of trading in the stock market? If I look from a bank's perspective, the bank also has numerous investments. Bank has innumerable investments. It makes, you are aware of that there is something known as statutory liquidity ratio, SLR, and cash reserve ratio, CRR, right? So as part of SLR and CRR requirements, the bank is required to park a portion of its liquidity into certain specified instruments. Like suppose all of us have fixed deposits with the bank. There could be a chance that all of us will go to the bank on the same day and say, give us my fixed deposit, I want to redeem it, I want to encash it. So the bank should have the necessary cash. The bank should have the necessary cash because these are demand deposits. It has to be honored whenever the customer demands them, right? So the bank is having specified, what you can say, specified guidelines on where it has to invest. So in all these scenarios, Ind AS 109 tries to understand what is your intention behind making an investment. So there it has identified certain business models. There it has identified certain business model. You can see this paragraph defines the business model. What is the business model? The business model is mentioning that it is holding the bond whose objective is met both by holding the asset to collect contractual cash flows. A fixed deposit. Tell me one thing. What is a fixed deposit? In a fixed deposit, what are the cash flows you can get? Bolo yaar. Simple question.
Interest.
Interest only.
Interest. And finally, principal.
Yes,
At
sir.
the
Yes. Both the things you will get. You will get interest also. You will get the principal. That is the redemption value also. Yes. Is this agreed as per the terms of the fixed deposit?
Yes, sir.
yes,
So can I say it is a contractual cash flow?
Yes, sir.
So this instrument is typically held for the purposes of contractual cash flow collection. Yes. So this investment in fixed deposit is typically categorized as SPPI, solely for the purpose of principal and interest. Okay. Or collection of contractual cash flows. Either this or this, the names are interchangeable, but this financial instrument, a fixed deposit, is solely for the purpose of principal and interest or collection of contractual cash flows. Is it okay? All right. Now I move next. So let us take the case of an investment in Tata's debentures. Tata's debentures. Now, Tata is coming out with a debenture issue. It already has. Okay. Tata Capital has debentures which give, say, 9% or 9.75% rate of interest. Okay. Which give a 9 to 9.75% rate of interest. Is it okay? So this is one instrument where you can still hold it until maturity and collect the contractual cash flows. But there is another facet to this instrument. What is it? These instruments are also traded in the securities market. Are we able to understand? Yes.
yes,
Yes, sir.
Because
Yes,
these
sir.
instruments are traded in the market, ultimately, just because an instrument is traded in the market, you cannot say that I don't want to collect only contractual cash flows. I repeat, it depends on the intention of the entity. Okay. For example, today I will make an interest in Tata's debentures only because the rate of interest is very high. Bank is offering me 7%. Tata is offering me 9.75%. The risk is there in Tata's, but at the same time, the CRISIL rating, credit rating, Jo Bolo, it indicates that the instrument is a stable instrument. I will make an investment in Tata's debentures, and my intention is to hold this instrument until maturity. In this case, tell me what will be your business model? Your business model will be the same thing because your intention is to collect the contractual cash flows, that is yearly interest plus the redemption value. Are you able to understand? Yes.
yes, sir.
But there may be another person. He will say, well, I don't mind annual interest coming in, but suppose there is a chance where the bank interest falls down, then the value of this debenture goes up, then I don't mind selling this instrument to actually book my profit. Is it possible? Yes.
Yes, sir.
Is it possible? Yes. When the demand for the instrument increases, the price in the market increases. And when the price in the market increases, clearly the profitability for on selling that instrument increases. So can I have a business model? Can I have a business model which not only is for collection of contractual cash flows, but also for selling the instrument if the time is right?
Yes.
दोनों
Yes, sir.
think from a business perspective. Okay, think from a business perspective. Both are possible. So that is the business model here. The entity has determined that it is holding the bond as part of an investment portfolio whose objective is met both by holding the asset to collect contractual cash flows as well as selling the asset. And when this is the business model, which is a combination, then this instrument, as per Ind AS 109, will be classified under fair value through other comprehensive income. Are we able to follow? Yes.
Yes, sir.
There is a third category because I covered the first category, contractual cash flows. The second category, contractual cash flows with an option to sell. And there is a third category, I'm holding it only for sale. Okay, I'm holding it only for sale. Okay, जब profit आएगा, I will sell and book my profit. So these are instruments which are HFS, held for sale. So HFS instruments will go to your profit and loss account. Are we able to follow?
Yes, sir.
उसमें
Yes,
there is no contractual cash flow. So typically your equity instruments will fall under held for sale category. Okay. But in investment in equity instruments, which is investments in equity other than subsidiary, joint venture or significant influence or associate. So your holding is neither significant as a subsidiary, your holding is neither significant as an associate or a joint venture. So in these three categories, you have an option. You can hold it at cost. You can record it at cost. But suppose you are holding this investment in equity, you have a one-time option to park the gain or loss under fair value through other comprehensive income, and that is non-reclassifiable. So when you do your financial instruments, you will do all this in detail. But right now, for my discussion, I had to explain to you that this instruments fair value movements, where it will be recorded in the P&L or OCI?
Sir, OCI.
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 OCI means fair value through other comprehensive income. Fair value through other comprehensive income. That means there is a movement in fair value. You will build the instrument to that value and the corresponding credit or debit, you will take it to other comprehensive income. Okay. All right. So the background behind the question is understood. Now let us proceed to solve the question. Okay. First of all, you forget the exchange rate and all. Okay, इसको भूल जाओ. अभी right now don't focus on that because that is the easiest part for you at the moment. Okay. See, I have purchased an instrument at the fair value of 1,000. So cost of the bond is $1,000. Are we okay with this? Yes. Now,
Yes, sir.
the effective interest rate is 10% per annum. Is it okay? So this
Oh.
10% is what is my finance income. Did you understand? Yes. So 10% is my finance income. It increases the value. Bond account debit to finance income, $100. Are we able to understand? Yes. Jeannie, did you follow? Pooja, Monica, Anila?
Yes, sir.
All
Yes,
right.
sir.
Fine. Okay. Now we move on to the next one. So 100 is the interest accrued. Now it is a bond. So I will get a payout also. So what is that coupon rate? What they have told? 4.7% on its face value. Okay, this is the coupon rate. Is it okay? Sir, how do I know what is coupon and what is effective interest rate? They will always mention this clearly. If they don't mention this clearly, look at whether something is being paid annually with reference to a face value. Face, not fair. FAC, face value. If something is being paid with reference to face value, it is not effective interest rate. It is coupon interest rate. Is it okay? So 4.7% on the face value of 1250. So 1250 into 4.7%, 58.75. Are we able to understand?
Yes, sir.
Yes,
So
sir.
that gives you the amortized cost at the end of year one. Okay, that gives you the amortized cost 1041.25. But this is an investment with a business model that enables you to sell as well. That is why you also have to check the fair value on the closing date. What is the fair value on the closing date? The fair value at the end of year one is 1060. So therefore 1060. Are we able to understand this? Yes.
Yes, sir.
Yes, sir.
So till now, whatever we did in US dollars, we are able to follow. Okay. So now let us proceed to ये जो हमने किया है, this is in days 109. What we are doing here is in days 21. Okay. क्या करें? I mean, the questions are like that. Okay. So now I purchased this. An entity purchases the US dollar bond at 1000 and the exchange rates on the date of transaction is 40. So I would have paid 40,000 rupees. Are we able to understand this?
Yes, sir.
Yes, sir.
Okay. Next, interest is accruing throughout the year. So what I will be taking? Average rate. Yes, 42.
Yes, sir.
So 4,200. Interest received is a cash inflow. So I received this at the end. Interest is received at the year end and the year end rate is 45. So 58.75 into 45, 2643.75. Are you able to understand this?
Yes, sir.
Yes. So the total comes to how much? आप सीधे सीधे करोगे, add less, or will you take it as a closing rate? Is it a monetary item? Bolo. Is this bond a monetary item? Yes.
Yes, sir. Monetary item.
So if it is a monetary item,
Which
if
we directly take 45 rate for that calculation.
yes. Okay, ठीक है पूजा, no problem. Okay. So 1041.25 multiplied by 45 will give you 46,856.25. I hope you understood this. Right?
Yes, sir.
If you do the add less, ये add less अगर आप करोगे, it will not match 46,856. So don't even do that. Okay? That is why if you see, there is no total line that is put here. Is it okay? Yes. This
Yes,
is
sir.
conversion, converted at closing rate. And then you have the fair value at the end of the year. This fair value 1060 into 45, 47,700. Are we okay with this? Yes.
Yes,
Yes,
sir.
sir.
Then what item should go where? We will discuss that. Okay. But till now, is it clear? Yes. Okay. So now 4,200 effective interest rate goes to the P&L. Do you agree? Correct.
Yes,
Yes,
sir.
Principal amount. It was originally at 40. It is being booked at 45 towards the close. Are you able to understand?
Yes, sir.
So that is exchange gain on principal amount. Yes.
Yes, sir.
Additionally, there is an exchange gain on accrued interest. I accrued the interest at 42, but my closing value of the instrument is measured at 45. So there is an exchange gain on interest accrual also, and that comes to 300 rupees. Are we able to understand?
Yes, sir.
Yes, sir.
Yes. So that also goes to your P&L. So total amount that goes to the P&L is 5,300. Is it okay? Till now, is it fine?
Yes, sir.
All right. Next one, I am having movement in fair value. Yes. 1060 is the fair value, but my book value is 1041.25. Yes or no?
Yes, sir.
So the instrument is being measured at fair value through other comprehensive income. That means at every reporting date, I have to restate this instrument to the fair value. So I have to recognize this difference in the other comprehensive income. At which rate? Closing rate. So this comes to 843.75. अभी तक कोई doubt? Any doubt till now?
Sir.
Sir, 100 we have reduced the interest received, no, sir, from the accrued interest. Why again we are taking 100 for exchange gain?
See, this is interest received, the coupon that is received, right? This 100 is getting added to the value of the instrument. Correct? Now, understand. My instrument started at 1000, then it built up to 100, and then I collected 58.75. Is it okay? Yes. So this comes to 1041.25. Now, this balance is already stated at 45, correct? Yes.
Yes, sir.
This is at 40. So 40 is becoming 45 here. So on the
Yes, sir.
principal, there is an exchange rate gain that is happening. 100 is accrued at 42, correct? Payout
Yes, sir.
is happening at 45. So the difference between 100 and 58 is still there at 42 rupees. Yes?
Yes,
I'm
sir.
able to understand. But why I'm taking entire 100 is 58 is already coming at 45. So if I
Yes,
have to
sir.
take
I
the
understood, sir.
differential, I have to take 100 at 42 to 45.
Yes,
Yes?
yes, sir.
So that is coming here. And therefore 5,300 is your exchange gain. So now when I pass the final journal entry, okay, so 843.75 I explained. So my bond should appear in the balance sheet at 47,700. Do you agree with this?
Yes, sir.
Yes, sir.
Because that is the fair value at the closing date. Okay, Jeannie, are you able to follow?
Yes, sir.
Yes. My opening bond when I invested is appearing at how much? 40,000. Correct?
Yes, sir.
So my bond account, if I draw, opening bond value is 40,000, closing bond value is 47,700. So therefore, investment in bond will increase by 7,700. Yes.
Yes, sir.
Yes.
And that increase is happening on account of exchange gain, 5,300. We just now calculated. It is happening on account of interest income that is getting accrued based on effective interest rate. It is happening on account of fair value gain, which we have taken to other comprehensive income. And it is getting reduced because there is a payment that is being received of the coupon of 2,643.75. Are you able to understand?
Yes, sir.
Totally, completely.
Yes, sir.
Shabbir, did you follow? Usha, Jeannie,
Yes, sir.
Mamta, all clear? Pooja, hope you understood. Okay, I'm not waiting for your response, but that's fine. Okay. ठीक है, so that's perfect. That takes care of this question also. So with this, I think we come to an end on the foreign currency transactions. Okay. Anybody has any doubts here? Koi doubts? Hemant, all clear?
Clear, sir.
Perfect. All right. Fine. Okay. So now we come to the next aspect. Okay. The next aspects, most of it, I would be running you through some simple illustrations. Anyways, I will be sharing with you this sheet, what I am doing. But this is more to make you familiar with foreign operations and to make you familiar with the conversions that happen. Okay. Then we will then we will come to the questions. Then we will come to the questions. Okay. All right. Fine. So the next part is, and this is the crucial one. Till now, what we did is something that you already knew. The last part you may have felt a little difficult because you have not known financial instruments. But once you know it, I think you will be fairly comfortable with that question. Now, let us take a case where I have a parent, H Limited holding company, and I have a subsidiary, S Limited. Okay. Or before a subsidiary, let us take, I have a company H Limited, which is having a foreign branch, which is having a foreign branch. Okay. Now, foreign branch could be integral or non-integral. You have studied in AS11. Yes.
Yes, sir.
Integral, non-integral. Now, basically, we have a similar concept where Ind AS 21 talks about dependence. So, when I talk about dependence, if the dependence is high, that means your operating expenses also are being met by the head office. Your monies, what you earn there, are immediately being repatriated to the head office. You are just an extension counter. So that becomes an integral operation. Whereas in the case of our non-integral operations, you have more of an autonomy. Is it okay? So now let us take a small example. Suppose this foreign branch is in US dollars. Okay. So I have the branch trial balance. This is an independent branch. Sir, dependent branch is there. Dependent branches are there. What will be the functional currency for a dependent branch? If this foreign branch was dependent,
Same
Then,
as Indian Ash Limited.
what would it be? Yes.
Same as Ash Limited.
Same as
INR.
Ash Limited. That's right. I gave you the example in the last class. Emirates India is showing you the website with airfares denominated in rupees but determined in dirhams. So this is only an extension counter. Thought process, costs, expenses, revenues, everything is decided sitting in Dubai. So what will be my functional currency? I don't have a mind of my own. Whatever I do is because what the parent instructs me to do. Okay. And therefore, since I don't have my own mind, can I have my own functional currency different from the parent? No. It will be the functional currency of the parent, that is INR. That is why I'm taking an independent branch at the moment. Okay. All right. Now, let us proceed. When I talk about the branch trial balance, Let us take a very simple trial balance. Okay. Debit, credit. This is in dollars. Okay. Now, when I talk about my branch trial balance, I have property, plant, equipment. Let us take small numbers, 100, debtors, 50, expenses at the branch, 150, sales, 200, and loan, 100. Okay. All right. So this comes to 100, 50, 150, 300, 300. Is it okay? And my exchange rates are opening 50, average 60, closing 70. Okay, so these are your exchange rates, opening, average, and closing. Now, I will have to, when I'm preparing my financial statements, you should ideally do the conversion of this into, INR. Yes or no? Yes. Now, when you are converting it into INR, what are the rates that you are going to use? What are the rates that we are going to use? The first rate is for your sales and expenses. What expenses should I normally use for this? Average rates, right? Ideally, it will be the spot rates, but for convenience purposes, we do use the average rates. Coming to your balance sheet items. What rates are you going to use for conversion? Yes. What rates are you going to use for conversion?
Closing.
Closing rate.
Monetary or non-monetary, will it be closing or will it be different for monetary? Will it be different for non-monetary?
The same.
It will be the same. Right? Balance sheet items, whether monetary or non-monetary, convert at closing rate, even if at fair value. ये तो cost हो गया, but even if it is at fair value, you will do the conversion at the closing rate. Are you able to understand? Yes?
Yes, sir.
Okay. All right. Why do we take the closing rate, and for non-monetary items, can somebody tell me? Monetary के लिए closing rate I take always. So there I don't see any understanding or any reason for deviation. But normally, if you have seen the foreign currency transactions, what have we told? Always the closing balance should go in at which rate? The closing balance should go in at the date, the historical rates, like a item of property, plant, equipment. When I buy a foreign currency denominated property, plant, equipment, I will do the recognition at the spot rate when I enter into the transaction, and thereafter it continues to remain at the spot at that rate only. If there is a revaluation, I will take the rate on the date of the revaluation, but I will never convert it using my closing rate. Are you able to understand? Yes.
Yes.
Yes,
Now,
sir.
my question is, here everybody said that, no, not even one person deviated. Everybody said that you are going to take the closing rate only for monetary and non-monetary items. What is the reason for this?
So
What
the
is
balance sheet items are the items which are reflecting their balances at a particular date of that the balance sheet, which is 31st of March.
बात तो सही है. मेरे भी बैलेंस शीट जब मैंने एसेट में इन्वेस्ट किया, व्हेन आई हैव इन्वेस्टेड इन माय एसेट व्हिच आई परचेज फ्रॉम अब्रॉड, इट इज रिफ्लेक्टिंग द वैल्यू इन माय ओन बैलेंस शीट. So there I take historical rate. I don't take the closing rate. Why? Reason is simple. See,
So because it is independent branch.
yes. What do you mean by an independent branch? That means you are not going to get any repatriation from this branch. Matlab, the branch will earn the money. That money only the branch will spend, and the branch will decide how it has to utilize the funds. Is it okay? Are you able to understand? Yes? Sure? Any doubts?
Yeah.
So basically, your branch is not selling the independent items, and neither you as the head office will be selling and realizing the individual items. Are you able to follow? Yes. If you have to close, you will close the branch in entirety and you will realize everything at that point of time. Are you able to follow? Yes. अगर मुझे branch बंद करनी है, will I only realize my debtors? No, I will realize my property, plant, equipment. I will pay off my loan. I will collect my debtors. If any inventories are there, I will sell that off. So all these things will happen at the same point of time. Are you able to follow? Yes. And therefore, this item, all these items will be with reference to only a single exchange rate, and that is the closing rate. समझ में आ गया अपने को? Yes? Yes? Jeannie, Hemant?
Yes, sir.
If I want to get money from this branch, will it be through repatriation of funds? It is an independent branch. बताओ मुझे. Will I get money from repatriation of funds? Tell me, Shabir.
Sir, what is the meaning of repatriation?
Repatriation का मतलब वहां पे उसने सेल किया है, that sale proceed वो आपको ट्रांसफर करता है. In the case of independent branch, will it happen like that?
No, sir.
It won't happen like that. Absolutely right. The branch will earn the money. The branch will keep the money with itself because the branch is using that money to fund its own operations.
Yes, sir.
So, as a head office, when are you actually going to get money from the branch?
At the year end.
Not year end.
Reporting
You
date.
decide to shut the branch.
हाँ, बेच देंगे तभी मिलेगा.
जब बेच दोगे तभी पैसा मिलेगा. When you are selling it, only at that point of time you are going to get the money from that branch. And when you are going to sell, what are you going to sell? Will you sell only debtors? Will you sell only property, plant, equipment, or will you sell everything, lock, stock, and barrel?
Everything.
Everything. So when I'm selling everything, it will happen at that specific rate on the date of sale.
Yes, sir.
And since it is happening everything at that point of time, therefore, all these items are realizable at a specific point of time. Yes.
Yes,
Balance
sir.
sheet items, basically. Okay. P&L though, they are not balances. Okay. So balance sheet items, they will get realized at a particular point in time. And because of that, each year end, the conversion will always happen at the closing rate, regardless of whether it is a monetary item or a non-monetary item. Are we okay with this?
Yes, sir.
Yes. Monica, did you follow? Yes. Jeannie, समझ में
Yes,
आ
sir.
गई?
Yes, sir.
Shabir,
Yes,
did
sir.
you
Clear,
follow?
sir.
Yes. Hemant, did you follow? Yes.
Yes, sir.
All right, fine, perfect. Who else is there? That's perfect. All right. So now we move on to the conversion. Now we move on to the conversion. So PPE, debtors, expenses, sales, loan. Debit, this will now be in rupees. Credit, this will now be in rupees. Don't get tensed that sir is not looking at the presentation or the questions. What time I will spend to explain this? In less than half that time, we will be able to solve the questions. And in half of that time, we will run to the theory and you will understand why this is important for us. Okay. So now property, plant and equipment. What rate do I use? Closing rate of 70, debtors closing rate of 70, expenses 60. Simple, 70 into 100, 7,000, 70 into 50, 3,500, 60 into 150, 9,000, 60 into 200, that gives you 12,000. Loan 70 into 100 gives you 7,000. So when I tally my trial balance, 9, 3, 12, 7, 19, 19,500, 19,500. There is this difference of 500. Why is this difference coming? Why is this difference coming? बोलो यार.
Sir, due to
Different
exchange rate.
conversion
Exchange
rates.
rate difference, sir.
Different conversion rates. आधे आइटम मैंने 70 पे कन्वर्ट करे, आधे मैंने 60 पे कन्वर्ट करे, तो कहां से टैली होगा? डिफरेंस तो आएगा ही. यू विल हैव अ डिफरेंस when half is happening at one rate, half is happening at some other rate. So this difference, where it will go? This
FCTR.
difference will go to a
FCTR.
different line item called FCTR. That's right, Monica. Okay. This difference goes to FCTR, foreign currency translation reserve. Okay. Now, where do I show this FCTR? Should it go to P&L or should it go to other comprehensive income? Think and answer. I'll give you a hint. This is related to the reason why we used closing rates for conversion. So now think and answer. Should it go to P&L? Should it go to OCI?
OCI, sir.
Okay. Anybody else? P&L or
OCI.
OCI? Why it will go to OCI? There is one strong reason. The strong
What?
reason is this money, is it going to be realized?
No, sir. When it
What
disposed,
will-
that time I realized.
Yes. Until I sell my branch, this money is not going to be realized. That is why this goes and sits in other comprehensive income. That is why this goes and sits in other comprehensive income. Are we able to understand? Yes? Sure? Everyone? Jeannie?
Yes, sir.
Hemant also confirm. Mamta, hope you understood. Usha, hope all of you understood. Okay? All right, fine. Now, when I sell the branch, जब मैं branch बेच दूंगा, when I sell the branch, will I realize this money?
Yes, sir.
So that time, should it be in OCI or should it come to the P&L? That time it should come to the P&L.
P&L.
When I dispose of the branch, जब मैंने branch बेच दिया, I shut down my branch. That time you will sell the asset, get the money, pay the liabilities, pay the money. Everything is closed. You will actually be left with cash on hand. Whatever is the situation, if your branch is a loss, you will have to put the money from your end. So now, when that is the situation, you please tell me, are you actually realizing the money? Answer is yes. If you are realizing the money, the realized profit kahan jayega? Will it remain in OCI or should it come to P&L? It should come to P&L. So this is a reclassifiable OCI. Are you able to understand? Yes?
Yes, sir.
Yes, sir.
So इसकी वजह से initially it will go to OCI, but when I sell the items, when I sell the branch, it will automatically move into profit and loss account. ठीक है? Yes. The foreign currency translation reserve is a paper reserve. कौन सा reserve बोला sir? Paper. It's a paper reserve. Why do I call it as a paper reserve? Because it is there only on paper. Have you actually set aside money to call it a reserve? Have you generated profits to call it a reserve? No. It is because of different conversion principles which has given rise to this. And therefore, it is rightly sitting in the other comprehensive income. It will be reclassified when you dispose of the branch. Are you able to understand? Yes. तो ब्रांच के केस में दिस इज द ट्रीटमेंट. ओके, मोनिका फॉलोड, जीनी.
Yes, sir.
Okay. Shabir,
Yes, sir.
hope you understood. Hemant also confirmed. Mamta, hope you understood. All right. Coming to the next part, foreign branch done and dusted. Now we move on to foreign operations only, but through a subsidiary. Through a subsidiary. Okay. What is new in a foreign subsidiary which is not there in a foreign branch? फॉरेन सब्सिडियरी में ऐसा क्या है जो ब्रांच में आपको नहीं मिलेगा?
Sir, stake.
स्टेक. तो जब स्टेक की बात करते हैं तो फॉरेन सब्सिडरी विल हैव व्हाट? इक्विटी
Sir,
शेयर कैपिटल,
हाँ.
reserves and surplus. These two things are there which are
Yes, sir.
not there in the branch. Yes. And apart from this, everything is there in the branch. Assets, liabilities, sales, expenses. Yes. So
Yes, sir.
assets, liabilities, sales, expenses. These conversions will happen exactly like how we studied for the branch trial balance conversion. Usme there is no change. So same conversion principles for assets, liabilities, incomes, expenses as for foreign branch. Okay, but exception, share capital and reserves and surplus. Okay, so when I talk about share capital, what will be the exchange rate for converting this? This will always be the historic rate. That is rate
Spotted on the buying date.
on the date of acquisition. On the date of, that's right, on the date of acquisition of shares, or what you call as control. Are you able to understand? Yes. All right. Why do I not change this? Why should I not change this? Why do I not restate it at the closing rate? Sir, सब तो कर रहे हैं, asset भी closing rate, liability also closing rate, sales expenses average rate. This is a balance sheet item. Why don't you take it to the closing rate? Because equity capital, of course, with reserves and surplus, is a part of own equity. You remember when we studied Ind AS 102, we were studying employee stock option plans, and then we studied stock appreciation rights. Yes, stock appreciation rights, every year we used to remeasure it at fair value, but stock options was always carried at fair value at the grant date. याद है थोड़ा बहुत?
Yes, sir.
Yes, sir.
Why did we not remeasure stock options? Because the balance used to sit in share-based payment reserve. Reserve is own equity. Own equity is never remeasured. Okay. For same reasons, this is sitting in own equity. What? The equity share capital of the subsidiary. is a part of own equity, and therefore I will not remeasure it. That is why it will be maintained at the historic rate on the date of acquisition of shares or the controlling stake. Are you able to understand? Yes.
Yes, sir.
Yes, sir.
Otherwise, what would happen if you could remeasure your equity today? Suppose you have an entity like Reliance, okay? It has 2 rupee shares or 1 rupee share trading at 3,000 rupees, whatever be the market rate, okay? So then, will I make my 1 rupee share to 3,000 and show it in my P&L? No, that does not make sense because your P&L is a representative of your operations and not of the marketplace fluctuations in your equity. So you don't remeasure your equity. So therefore, that is the reason why I don't remeasure my equity. Okay, so reserves and surplus. Coming to reserves and surplus, at what rate will I measure? This also will be at the old rates only. But there is a change. There is a change. Reserves and surplus, is it a one-time item or is it a build-up that happens year after year?
So build up, but here is two type of reserves, like pre-acquisition reserves and post-acquisition
आएंगे,
reserves.
उसके आएंगे. Let us not jump immediately. Okay. Filhal, these reserves are building up year after year. Okay. So when I talk about reserves building up year after year, what is the source of these reserves?
Profits of the
Profits.
company.
Profits of the company. So source is profits. Source is profits. Therefore, which rate should I use?
Average rate.
Average
Profit.
rate. Average rate. Are you able to understand? Yes. Hemant is right. Shabbir?
Yes, sir.
Yes. Now,
Yes, sir.
Monica said, सर प्री एक्विजिशन रिजर्व भी हो सकते हैं. यस, सपोज यू हैव इन्वेस्टेड इन एन एग्जिस्टिंग कंपनी. ओके, you did not incorporate the subsidiary, but there was a company outside India and you got a controlling stake in that. So there is a reserve balance on the date of acquisition. Yes or no? उसको हम लोग
Yes,
बोलते
sir.
हैं प्री एक्विजिशन रिजर्व्स. Pre-acquisition reserves. So what rate are you going to take for those reserves? You
Date
are,
of acquisition.
yes, the rate on the date of acquisition. Why? Because these reserves, are they earned reserves or are they purchased reserves?
Purchase reserves.
Purchased reserves, right? So pre-acquisition reserves, these are purchased reserves, not earned. Hence, rate prevailing on the date of acquisition. Are you able to understand? Yes. See, this whole thing appears यार कितने सारे rate ही rate है, but if you look at the overall understanding, it's not difficult. It's in a very logical and very what you can say, a very systematic manner in which the standard has given this explanations to you. Okay, so rate prevailing on the date of acquisition. Acha, after that also reserves build up. Yes, after date of acquisition reserves build up because you will run the subsidiary. Subsidiary will continue to make the profits. So tell me one thing, after the date of acquisition, whatever reserves are there, what rate are you going to use for that?
Average rate.
Average rate.
Average rate when I earn those profits. When I earn those profits. Is it okay? So
Yes.
are we clear with the conversions for the post-acquisition, pre-acquisition reserves? And are we conversant with all these items? Assets, liabilities, incomes, expenses, कौन से rate से जाएंगे? Is it all clear? Yes?
Yes, sir.
Okay, fine. Now let us go a little technical. Let us now increase the technicality. Okay, धीरे धीरे we will increase your levels of complexity. Okay. When I do the subsidiary consolidation, okay, I'm not talking about any rules or anything. Subsidiary is in foreign currency. Foreign currency has to be converted to Indian currency. I will use the different rates, whatever is there. So now there will be an FCTR. This much you agree? Yes. Assets will go at closing rate, liability at closing rate, sales expenses at average rates, share capital at the rate on the date of investment, reserves on average rates, or if they are purchased, then on the date of acquisition. So therefore, the subsidiary's trial balance will give rise to a foreign currency translation reserve. Do you agree to this?
Yes, sir.
Now you tell me, will the foreign currency translation reserve be a post-acquisition reserve or a pre-acquisition reserve? Okay,
Post acquisition reserve.
sure. Why not pre?
सर जो भी चेंजेस हुए हैं वो सब बाद की डेट पे और हमने रेट चेंजेस की वजह से जो डिफरेंस आया है वो लिया है.
That's right. See, balance sheet of a US subsidiary on 1st April 2023. Let us prepare a very simple balance sheet. Okay, this is in dollars. So I'll just do a T form balance sheet. बोलना मत कि सर को vertical balance sheet नहीं आता है. Okay, because I just want to explain the concept to you. Okay, so I have my equity share capital 50, P&L 50, loan 50, property plant equipment 1000, not 1000, sorry, let us make it as 100, and debtors at 50. Balance sheet tally is at 150. Okay. Opening rate 50. Now, opening rate is 50. That means when I have made the investment. Okay. This is on date of acquisition. Now, on the date of acquisition, if I do the conversion of this trial balance, yes. So balance sheet of US subsidiary into INR. Yes. Let us suppose I do this conversion. What rate will I convert the equity share capital on the date of acquisition? That is 50. So 50 into 50, 2500. Do you understand? Yes. P&L 2500. Loan 2500. Everything at 50 because this is the date of acquisition. Then PPE 5000, debtors 2500. So total comes to 7500 on either side. Are you convinced with these conversions? Yes. Is everybody okay with these conversions what I have used? Yes. Mamta, Monica, Pooja confirmed, Ginny, Shabir, Usha, Niranjan, all clear?
Yes, sir.
All right. Obviously, FCTR is not going to come here because on the date of acquisition, all my assets and liabilities also will be converted to the same rate as on the date of acquisition, and therefore no FCTR arises on date of acquisition. This is not true only for this example. This is true for any example across the board, right? On the date of acquisition, if I do the actual conversion everywhere, it will be the same rate on the date of acquisition. So therefore, FCTR never arises on the date of acquisition. It will always arise afterwards. It will always arise afterwards. Therefore, FCTR is always post acquisition reserve. Are you able to understand? Monica, did you follow?
Yes, sir.
Yes. So that's perfect. All right. So now we move on to no. I will extend the same example. 31st March 2024. Same position. Okay, same position. What is the position? Equity share capital 50, P&L 50, loan 50, PPE 100, debtors 50. So total is 150. So this is on the closing date and this is in US dollars. It is exactly the same. Whatever incomes I have earned, same expenses. So therefore, there is no impact on the P&L. So now, opening rate equals rupees 50. Closing rate is rupees 60. Okay. Now, if I have to do the conversion, tell me, property, plant, equipment, what rate will I do? This is on 1 year later, 31st March 24. What rate will I take? Property, plant, equipment. 50 or
Closing rate, sir.
closing rate of 60. So this comes to 6,000. Debtors, opening or closing?
Closing.
Closing. So 60 into 50, 3,000. Equity share capital. Rate on the date of acquisition, which is 50. So this comes to 2,500. P&L did not earn anything during the year. So same opening rate on date of acquisition. Then I am having loan. Loan, which rate will I take?
Closing, sir.
Closing. So 60 into 50, 3,000. So now you do the balancing. 9,000, 9,000. So 9 minus 3, 6 minus 5, 1,000. This is your FCTR. When did this FCTR arise? Between the period 1/4/23 to 31st March 24. Is it post-acquisition or pre-acquisition?
Post acquisition.
Therefore, post-acquisition. So I explained to you why FCTR can never be pre-acquisition FCTR. Is it okay? All right. Now, you people have done consolidation, not here, but in intermediate. Yes.
Yes, sir.
Yes, sir.
Okay. So in consolidation, you would have studied something known as parent and minority interest. Yes.
Yes, sir.
So यहाँ पे we don't call it as minority interest. We call it as non-controlling interest. Did you know NCI here? Did you hear about NCI?
Yes, sir.
अच्छा.
Yes, sir, I have heard.
जानते हो? Okay,
Yes,
fine.
sir.
So for now, it's not exactly minority interest, but आज के लिए इतना समझ लो NCI minority interest are almost same. Okay. So this FCTR, does it belong only to the parent or should it be split between parent and NCI?
Split between the parents and NCI.
What is the reason?
Sir, it's total difference which
Yes.
has right of other non-controlling interest also.
Yes. ये जो पूरा बैलेंस शीट है सब्सिडियरी का, the entire balance sheet of the subsidiary represents the assets, liabilities, incomes, expenses, reserves, not only of the parent but also of the NCI. And therefore, the FCTR also will have to be split between the parent as well as the NCI. Are we able to understand? Yes.
Yes,
So
sir.
why
Go ahead,
uh,
Shabir.
so why it is subsidiary it is going to split, sir? I'm not getting that. It should be of only the parent company.
नहीं नहीं. See, this, suppose I have acquired 80% stake in the subsidiary, right? So if I have acquired
Okay.
80% stake in the subsidiary, this company, still 20% of it belongs to the non-controlling interest. Yes.
Okay, sir. Okay, got
See,
it, sir.
when I do the consolidation, I will do 100% consolidation. I'm not saying there I will do only 80% consolidation. What is my consolidation principle? All items of assets, liabilities, I will do 100%. Only reserves and surplus, I will do the split between the parent and the NCI. Equity, capital, reserves and surplus. Pre, post, parent, NCI. That is what you have been doing. Yes. So that will continue. But my whole point is this company still 20% of it belongs to the NCI. Therefore, FCTR also will be shared with the non-controlling interest. Are we able
Okay,
to
sir.
understand? Yes.
Yes, sir.
You are?
Got it. Thank you, sir.
Okay. All right. Fine. Usha, clear. Mamta, is it okay? समझ में आ गया? Hemant has confirmed. Yes. Okay. All right. Fine. So that takes care of the basic principles. Okay. Now, let us run through. It's 8:40, right? We do one thing. We take a break for 10 minutes. Yes. The next part will be a little heavy and it may extend a little. I'll try not to extend, but nonetheless, if it extends, please bear with me. So we take a small break, about 10 minutes, and then we shall continue. Okay. So now let us understand the consolidation. Okay. How exactly do we do the consolidation? We will take a very small example, and with that, let us then build up the case. And then we will wind up the discussion with a very detailed consolidation question, which contains all the possibilities. Okay. All right. Now, let us take the case of an entity H Limited acquires 100% in S Limited for $100, or let us make it $1,000 on 1st April 2023. Okay. Exchange rates 1st April 23 rupees 50, 31st March 24 rupees 60, average rate rupees 55. Okay. Right now, let us just try to understand the concept before we move on to solve it. Okay. So H Limited's balance sheet is obviously in INR on 1/4/23. It will have many assets and liabilities, but most important is it will be having investment in S Limited. $1,000 into 50. Are you convinced with this? Yes?
Yes,
So now this rate will always remain the rate for the purposes of this instrument, because I have made this investment and this is the rate on the date of acquisition. ये rate हमेशा रहेगा. Okay. Now let us do one thing. Let us look at S Limited's balance sheet. Okay. S Limited's balance sheet in US dollars. First April 23, March 24. 1st April 23, March 24. Okay. Now, suppose I have equity share capital $100, P&L surplus 800, 1,100. Very simple. My whole objective is not to teach you consolidation, but to make you understand the impacts. Okay, so this is 900, 1,200, 900 and 1,200. So far, is it okay? Have you understood the case?
Sure.
All right. Now, if I have to consolidate S Limited's balance sheet, how will I do the consolidation? सबसे पहले I have to convert USD into INR. Yes or no?
यस सर।
तो कौन से रेट पे आप कन्वर्ट करोगे? रीस्टेटिंग
क्लोजिंग रेट।
Yes, restating S Limited's balance sheet. Pardon me, I'm having a slightly bad cold. Okay, all right. So restating S Limited's balance sheet, 1/4/23, 31/3/24, 1/4/23, 31/3/24. Okay. When I restate my equity share capital, this will be restated at the rate on the date of acquisition, which happens to be how much? 50, right? 50. So this will be 100 into 50. So that will be 5,000. Do you agree? And this is P and L. So this is going to be 800 into 50. So 4,000. Do you agree with this? Yes. Is it right? 4,000 or 40,000?
40,000 sir.
40,000. And then the assets. This will obviously go at closing rate. That is 900 into 50. 45. Any doubt so far in the first restatement? Any doubts here? No doubts? All clear? So let us move next. साल खत्म हो जाता है, year ends, and then we look at the revised status. I have assets worth 1,200. What rate should I convert these now? What rate should I convert these? Closing. What is my closing rate? 60. So 1,200 into 60. 72,000. Okay. Now, equity capital will be converted at what rate? What rate will I convert equity share capital? Acquisition rate. So what is your acquisition rate? Same 5,000. P and L will be converted at what rate? Well, what is the P and L balance now? 1,100. Out of 1,100, 800 will happen to move at the same rate. That is 40,000. And then post acquisition, I will be having a further conversion of 300 into 55. 300 into 55. So that comes to how much? 300 into 55, 16,500. Have you understood this? Yes.
Yes.
Jeannie, did you follow? Pooja, Shabbir, Usha, Niranjan, Mamta, Hemant,
Yes, sir.
all
सर
clear?
300 कहाँ से आया?
300 is basically the profit that I earned in the current year.
Okay, yes sir. Okay, sir.
Okay. So now when I do this conversion, 72,000 minus 45,000 minus 16,000. $10,500. What will this 10,500 be? FCTR, correct? Yes? Bolo guys.
Yes, sir.
And this will be entirely post-acquisition reserves. Okay? This will entirely be your post-acquisition reserve. Okay? All right. Now let us move on to the next one. Okay, so I have restated the balance sheet. I now have in my balance sheet equity capital, P&L, reserves, and the FCTR. Now, I had asked you to read up something for me and come today. Something that you have done in
Sir,
respect.
related to goodwill.
That much you have studied, right?
Yes, sir.
अच्छा, ठीक है. I'll take you through that. There is no problem. Okay. See, normally there are multiple ways in which you calculate the goodwill. What we normally do is we prepare a cost of control account. You may have studied something different, so I will not deviate much. I will not explain much in detail. Basically, your cost of control is nothing but how much
Yes.
you paid to get controlling stake in the entity. So I have paid investment in subsidiary. Sir, I have paid 50,000. And this will be compared with what you are actually getting. What are you getting is the reserves and the share capital on the date of acquisition. Do you know this? Are you able to recollect this? Yes.
Sir.
So this you compare it with equity share capital. That amount is how much? That amount is 5,000. And P&L 40,000 on the date of acquisition. Okay. This is on the date of acquisition. So if I use this method, I will get a goodwill balance of 5,000. Are you able to understand this?
Yes.
Yes. Jeannie, Shabbir, Hemant, Pooja.
Yes, sir.
Yes. ये
Yes.
समझ में आ गया ना? This you have understood. Okay, fine. Now, when I do my analysis of reserves, what are my reserves? My total reserves balance is 40,000 plus 16,500, correct? So 40,000 plus 16,500. 40,000 opening, 16,500 closing. So therefore, I am having 56,500. Opening 40, current year profits, what you have earned is 16,500. This, if I split it into pre-acquisition and post-acquisition, pre-reserve is 40,000, post is 16,500. Pre-acquisition goes to your cost of control account. We've already taken it there. Post-acquisition goes to your consolidated P&L. You remember this? Yes, or am I teaching something which is very difficult or unable to follow? Yes. Do you recollect this?
Yes, sir.
If you don't recollect, please tell you don't recollect. You don't have to struggle. I'm here to remind you. Ginny, Pooja, Shabbir.
Sir, please remind, sir.
Yes, sir.
Fine. See, when I made an investment in this company, I made it on which date? I made it on 1st April 2023, right? So on this date, this is not a newly incorporated company. This company was always there in existence. So on this date, I have paid $1,000 for it. Okay, in today's terms, it is, I mean, in INR terms, 1,000 into 50, I have paid 50,000. What happens in consolidation is basically this investment in S Limited will go away. It will be replaced by the assets and liabilities of S Limited, because in effect what is happening is you are controlling another entity. So uske assets, their liabilities, its sales, its costs, its expenses, its P&L. Everything belongs to you. So this investment in S Limited will go away from the balance sheet and it will be replaced by what? It will be replaced by subsidiaries assets, subsidiaries liabilities, and subsidiaries net worth. Now, when I talk about subsidiaries net worth, on the date of acquisition, it had equity capital of 5,000 and P&L of 40,000. That means you have paid something that is worth 45,000 and for that you have paid an amount of 50,000. Is it okay? This cannot be consolidated into your P&L directly because what is happening is this 40,000 is something which you have not earned. This is something which you have purchased. And that is why we will have to remove it in the cost of control. As far as equity share capital is concerned, sir, why are you removing that? Because the investment in S is nothing but the share capital of S. So they become kind of intercompany transactions. So we are basically removing both of them. So on the credit side, you are having equity capital and P&L, opening balance removed, which is giving me a goodwill of 5,000 rupees, which is giving me a goodwill of 5,000 rupees. Now, when I look at my reserves on you are consolidating on this date. Don't forget, I am not consolidating on 1st April. I am consolidating on 31st March. On 31st March, your total reserve balance was opening 40,000. This will continue to remain at the rate on the date of acquisition plus the rate that I have earned when I am in control of the subsidiary. That is the average rate. So this 56,500 is the total P&L of the subsidiary. Out of that, 40,000 was for your pre-acquisition reserves, not when you had control over the entity. And therefore, that will go and sit where? That will go and sit in your cost of control account. It will be adjusted while I compute the goodwill. Whereas my post-acquisition represents the earnings that were generated when I was in control of the entity. And therefore, it will go directly to the consolidated profit and loss. Are you able to understand now?
Yes.
Shabir, Hemant, yes? Did you follow?
Yes.
Okay. So this will go to the consolidated P&L. Now, all this is fine. Everybody is convinced about this. But Ind AS is not convinced about this. Ind AS 21 has a problem with this goodwill. See, what did I do? I purchased the shares for $1,000. Okay. So if I prepare this COC account in dollars, I'm just doing a calculation. I paid $1,000 for acquiring a company that had 100 plus 800 in equity capital. Equity capital 100, P&L 800. So what is your goodwill in dollar terms? It is 100. Do you agree with this? Yes?
Yes, sir.
Sir.
Hemant, Shabbir,
Yes, sir.
Jeannie, understood? Niranjan,
Yes.
Mahamudra has confirmed. Okay. Now, my goodwill is actually $100. Now, here my goodwill was 5,000. Okay, in INR जब मैंने calculate किया. Your entire balance sheet of S Limited, assets and liabilities, they are converted using which rate? Bolo. Assets and liabilities are converted using which rate?
Closing rate.
Closing rate.
Closing rate. But if I stick to this 5,000, it is coming as 100 into 50. That is 5,000. Yes or no?
Yes, sir.
What is this 50? This is opening rate. Yes or no? Rate on the date of acquisition. Is it consistent? In my balance sheet consolidated, you know how it will appear? Some assets are at closing rate, liabilities at closing rate. This goodwill on consolidation will appear at the opening rate. Equity capital will be of the parent. Consolidated P&L will be at the mixed rate. Do you think there is any consistency in this balance sheet?
No, sir.
There is no
No, sir.
consistency. See, you can have inconsistency only on two things in life. One is equity capital, one is reserves. Apart from this, all other items, basically other than your net worth, all other items must be converted at closing rate, must be converted at closing rate. Are you able to understand? And therefore, what the standard tells is your goodwill cannot be appearing at 5,000. It must appear at 100 into 60, that is 6,000. Are you able to understand this? Yes.
Yes, sir.
Because in
Yes.
reality, have you prepaid, have you excess paid 5,000 rupees or have you excess paid $100? What is it?
Sir, access paid $100.
Yes. You have not paid in excess 5,000 rupees. You have paid in excess $100. That is what Ind AS 21 tells you. Ind AS 21 tells, why are you calculating goodwill in INR terms when you have done the acquisition in foreign currency? If you have done the acquisition of a foreign subsidiary by paying foreign currency, then ideally the goodwill should be computed in foreign currency. So I compute this goodwill in foreign currency and then I convert it into INR using the closing rate. Are you able to understand? Yes.
Yes, sir.
Now, if I only show the goodwill in the consolidated balance sheet at 6,000 rupees, will my consol balance sheet tally? It won't. Why? Because your consolidated balance sheet is going to come in INR. In INR terms, your goodwill is only 5,000. Yes or no? You are doing a one-sided recasting of numbers from 100 into 50. You are taking it to 100 into 60. Are you able to follow? Yes?
Yes, sir.
You are not able to follow because this is consolidation. Okay. All right. So let us do one thing. I cannot. What is the issue? Okay. Let me see how I can explain to you better. Investment in subsidiary, equity share capital, pre-reserves giving rise to goodwill. Okay. Now, investment in subsidiary was 1,000 into 50,000. Equity share capital was $100 into 50. So that is 5,000. Pre-reserves was 800 into 50. So that is 40,000. So I am left with a goodwill of 5,000. What is this 5,000? This is nothing but 100 into 50. Are you convinced with this?
Yes, sir.
Now, what the standard says is, I cannot take the goodwill at 50 on 31st March 24. It has to go at 60. So if it has to go at 60, 5,000, it is saying it should become 6,000. But if I make 5,000 as 6,000, where will the second effect go? अरे दो इफेक्ट होने चाहिए ना. If my goodwill is going up by 1000 rupees, something else also should happen for 1000 rupees. Otherwise, how is the double entry matching? Yes or no?
Yes, sir.
बोलो यार. Ab this is basic. I cannot make this as 6000 by itself. I need a corresponding credit that should happen somewhere. Okay. So what Ind AS 21 tells is you increase the goodwill in this case by 1000. And what am I going to credit? I will credit FCTR. Is it okay? Yes.
Yes.
Yes, sir.
Yes, sir.
Restatement of goodwill to closing date. Is it okay? Any doubts? Any doubts so far?
No, sir.
अच्छा. Tell me one thing. नामकरण आपने दिया FCTR. Yes. But is this FCTR of 1000 the same as this FCTR of 10,500, or is it in addition to 10,500?
Addition to 10,000.
This is in addition to 10,500 because इसमें देखो, this is S Limited's balance sheet. S Limited's balance sheet does not have goodwill coming anywhere. Your goodwill is going to come only at the time of consolidation. And this restatement is happening only for the purposes of consolidation. So your FCTR is going to be 16,500 plus a further 1,000 rupees. Are we able to understand this? Yes? Sure?
Yes.
Yes, sir.
All right. So that is adequate for us. That is adequate for us. Okay. Now, where will this FCTR go? Okay. Where should I show this FCTR? This is FCTR on goodwill of 1,000 rupees. The original FCTR of 10,500, this FCTR would go to parent and LCI. This would go to parent and LCI. Okay. Because this is FCTR on translation. FCTR on translation. This is FCTR on goodwill. Where will this go? Will it be shared to the parent alone, or will it go to the parent and LCI? Here it is
Parent alone.
Here it is 100% subsidiary, so you will obviously say parent alone. But suppose it was a 90% ownership and 10% NCI, to whom it would go? So here there is something for now. I want you to just remember it. You will learn this when you do consolidation. If it is partial goodwill, it will go only to the parent. If it is full goodwill method, it will go to parent plus NCI both. Okay. So what is partial, what is full? I don't want to get into this discussion right now because this is something that you will be studying in your Ind AS 103, that is business combinations. Okay, so I'll skip this part and move forward. Okay, so let us move ahead.
Sir,
Yes.
sir, we only compute MI balance, right?
Yes. Yes. NCI.
Here we add pre-acquisition profit, pre-acquisition dividend.
हाँ जी, हाँ जी, हाँ जी, सब आएगा, सब आएगा. But right now, I don't want to confuse you to that level because right now my focus is only on making you understand Forex का क्या impact है. Okay.
Okay, sir.
I will come to NCI, pre-acquisition dividends, pre-acquisition profits. We have a question. I will take you through that question. But in that question, what I anticipate is there will be some small disconnects here and there because you have not studied consolidation. Okay. So for that and that reason alone, you may have some disconnects, but let us see how it goes about. Up till now, is it clear? यहाँ तक सब clear है to everyone?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
All right. Okay, Shabbir also. Usha, Monica ने तो बता दिया. Yes. Okay. All right, so that takes care of this part. Okay. All right, fine. Now, let us then come to our theory. Okay. Now, let me see where we stand and then we shall proceed. Okay. All right. See. Okay. So what is a foreign operation? Well, it could be activities that are based or conducted in a country or currency other than those of the reporting entity. So suppose I have the parent, it could be having a subsidiary in Sydney, an associate in New York, a branch in London, and a JV or a joint arrangement in Germany. So that is going to, all these are your foreign operations of H Limited. Okay. I'll come to NIFO a little later. Net investment in foreign operation kya hai? I will come to that later. But let us move ahead. Okay. Now, approaches to the translation of foreign operations. See, either you do a step-by-step consolidation. So if H has an investment in S, S is having a further investment, then either you do a fold back into the level 1 subsidiary and then to the parent, or you do a complete uh, translation in the currency of the ultimate parent. This is just for theory purposes. What we need to understand is how am I going to translate my foreign operations? जो कुछ भी मैंने आज बताया है, whatever we have discussed today, that is exactly what is mentioned here. Okay, so here you are having your financial position, assets and liabilities translated at the reporting date, exchange rate, closing rate. Everybody agrees to this? Yes. Results, you shall either use the exchange rates at the date of transactions, or you may use average rates if they do not fluctuate significantly. Again, same what we have done. All resulting differences, exchange differences, are recognized in other comprehensive income under a separate component called FCTR. Did we do that? Yes. In our example, what we saw just now, we have accumulated 10,500. That is nothing but FCTR on translation. Okay. So nothing new here. Okay. Intra-group transactions, we will come to this later. I'll come to this. Okay. NIFO, whatever is this, I will come to this later. Okay. So now let us proceed to look at some of the questions which are there. Then, you can understand better. Okay. All right. Okay. Okay, fine. We will look at some questions, then go back to intra-group balances, then come back to the questions again. Okay. Parent P has USD as its functional currency and subsidiary S has Euro as its functional currency. P, whose reporting date is 31st March, lends $100 to S on 30th September X1. S converted the loan amount received into euros on receipt. Exchange rate on 30th September, $1 equals 1.5 euros. And on 31st March, $1 equals to 2 euros. Past journal entries in the books of S as well as the books of P. Is the question okay? All right. So now let us understand. I am in the books of P. P has given a loan at $100. So intra-group receivable account debit to bank, $100. Are you okay with this? Yes.
Yes, sir.
This is the functional currency. तो यहाँ पे आपको कुछ conversion करने की जरूरत नहीं है. Now in the books of S, in the books of S, you are having bank account debit 150 to intra-group payable. This is the conversion rate of 1.5. So I have recognized an intra-group payable of 150. Is there any doubt here?
No.
All clear? Yes. Monica, clear? Yes.
Yes, sir.
Okay. Now let us move next. 31st March. Is it a monetary liability for the entity? Answer is yes. So foreign exchange loss account debit to intra-group payable 50. To intra-group payable 50. Okay. So in S Limited second entry, the liability is remeasured and a translation loss is recorded. Is it okay? Yes?
Yes, sir.
Yes, sir.
Fine. Okay. Now, will this have any impact on my financials here? Parent ke books mein, will this have any impact? Change in exchange rates? Answer is no, because the currency what it has given the loan is in dollars. Able to follow? The currency that it is given in is in dollars, and dollars is the functional currency of the parent. So there is no question of doing any restatement or translation, etc. It continues to sit at $100. Now, when I do the consolidation, balances will get eliminated. But my question is, on consolidation, the receivable and payable will be eliminated. But the exchange loss of 50 euros will remain on consolidation. Should I keep it or should I eliminate that also? Answer is no. You should keep it. Why? Because from a group perspective, you are exposed to currency fluctuation risk. Okay. From a group perspective, S is exposed to currency fluctuation, and since S is exposed to currency fluctuation, it is but natural that the group also will be exposed to currency fluctuation risk. Okay. This is appropriate because S will need to obtain USDs in order to repay the liability. Therefore, the group has a foreign currency exposure. Exchange loss will be taken to console P&L unless the loan part forms part of net investment in S. That we will see later. So far, have you understood? Yes.
Sir, can you repeat? I couldn't understand last paragraph 51. That's one.
आपको यहाँ तक समझ में आ गया? This is only important for now. Forget the last 3 lines. Okay. See, P has given loan to subsidiary for $100. Yes. Parent
Yes,
has
sir.
recognized the loan in dollars, so there won't be any currency fluctuation impact. Subsidiary has a currency of euros. Okay. Now, when it got the money, it has converted it into euros. So bank account debit to intra-group payable 150. Okay. Now,
Yes, sir.
This is a monetary item. For whom? For the subsidiary. Yes, it is a loan.
Yes.
So therefore, subsidiary has to do a restatement to 200. Yes.
Yes, sir.
So 200 may say 150 was already recognized in the opening, and therefore there is an exchange loss of 50.
Yes, sir.
Will this 50 appear in the consolidated P&L of H Limited is the question. What do you think?
No, sir. No, sir.
Why no?
Sir, the loan is in USD because the loan in USD.
मैं स्टैंड अलोन की बात नहीं कर रहा हूं. आई एम टॉकिंग अबाउट एच लिमिटेड पेरेंट्स कंसोलिडेटेड फाइनेंशियल. स्टैंड अलोन में तो कुछ नहीं होगा. ओके. बट पेरेंट्स कंसोलिडेटेड फाइनेंशियल्स में will I still have this foreign currency loss appearing or will it vanish?
Yes, sir. Yes, sir.
Yes. आएगा. Jeannie,
Yes,
hope
sir.
you understanding. Pooja, Shabir, Hemant, hope you guys are understanding.
Yes,
See,
sir.
from a group
Yes, sir.
perspective, if this settlement should happen by the subsidiary to the parent, if this settlement should happen, the subsidiary will go to the authorized dealer, exchange the euros for dollars, and then make the payment. Now, when it is exchanging the euros for dollars, can there be a rate fluctuation? Answer is yes. So, who is exposed to it? Sir, the subsidiary is exposed, but ultimately the authorized dealer is a third party to the group. Yes or no? And
Yes,
therefore,
sir.
the group does have a foreign currency exposure of $50. Is it okay? Or
Dollar.
50 euros, sorry. It has an exchange loss equivalent to 50 euros. Is it okay? Yes,
Yes,
because
sir.
euros के case में है, right? This is,
Yes,
yeah,
sir.
this is euros. I'm sorry. I wrote the wrong currency here. Okay. Euros 50. Okay. So there is a group foreign currency exposure of 50 euros. Are we able to follow? Yes. Jeannie,
Yes, sir.
Yes, sir.
fine.
Sir.
Mamta,
Yes,
hope
sir.
you are understanding. Okay. All right. Now, similar position. Only thing is, instead of loan, this is sale of goods. Will there be any change in the treatment? Answer is no. Whatever currency fluctuation has happened, it will remain as a loss or a gain because that represents the group's exposure to the foreign currency. Are we able to understand? Yes. So इसमें कुछ नहीं है. Functional and presentation currency of parent is dollar, subsidiary is euro. P sold goods of $100 when the rate was $1 equal to 2 euros. At the year end, amount is still due. Exchange rate is $1 equal to 2.2 euros. How should the exchange difference be accounted for in the consolidated financial statements? Well, you show the exchange difference, right? You don't, what you can say, you show the exchange difference and you don't avoid accounting for it in the consolidated financials because it does represent a group exposure. Is it okay?
Yes, sir.
में कुछ है नहीं बताने के लिए. Okay? All right. Okay. So now let us move on to the next one. Okay. What you do is, I want you to go through this question by yourself right now. Okay. Just go through. I'll come in a minute. Okay, yeah. So M Limited is engaged in the business of manufacturing of bottles for pharma companies and non-pharma companies. It has a wholly owned subsidiary, G, which is engaged in the pharmaceuticals business. G purchases the pharmaceutical bottles from its parent company. Demand of G is very high, operations of M are very large, and hence to cater to its shortfall, G also purchases the bottles from the other companies at competitive prices. M Limited sold pharmaceutical bottles to G for 12 lakh euros on 1st February 20x1. The cost of these bottles was 830 lakhs in the books of M Limited at the time of sale. At the year end, all these bottles were lying as closing stock with G Limited. Functional currency of G is the euros, while M Limited's functional currency is INR. Exchange rate on 1st February, 1 euro equals 83. On 31st March, 1 euro equals 85. Provide the accounting treatment for the above in the books of M Limited and G Limited and show the impact on consolidated financial statements. Support your answer by journal entries wherever necessary in the books of M Limited. Is it okay? Yes. So let us proceed. Who has sold goods to whom? M has sold goods to G.
G.
Yes. How many? What is the value? The value is 12 lakh euros. Correct? Yes.
Yes, sir.
12 lakh euros multiplied by what is the exchange rate? 83.
83.
So 12 into 83 gives
996.
96.
996 lakhs. So M will pass the entry. First entry will be G Limited account debit to sales 996. So I hope everybody has understood this. At the end of the year, it is unpaid. 83 becomes 85. 2 rupees per dollar is the gain that has accrued. And therefore, 12 lakhs into 85 minus 83. 24 lakhs. Are you able to understand? Yes.
Yes,
Yes,
sir.
sir.
So that will be the exchange gain unrealized. That will be the exchange gain which goes to the P&L. Are we okay with this?
Yes, sir.
Yes, sir.
It's clear. Hemant, hope it's clear till you. Okay. All right. Now, in the books of G Limited, it will recognize inventory of 12 lakh euros, which will also be the closing stock if it is unsold. Okay. Accounting treatment in consolidated financial statements, receivables and payables between M and G gets eliminated. Closing stock of G will be at lower of cost or NRV. Is it okay? Yes.
Yes, sir.
Yes, sir.
Yes, sir. Clear.
That's it. And then closing stock के केस में you have the cost of these bottles was 830 lakhs. Okay. And profit element is 166. How did they get the profit element? Profit on sale of inventory, 996 minus 830, 166. This is intra-group profits. The company has made a profit on sale to its group company, and those goods are still in stock. So you have to reverse that profit. So consolidated P&L debit to inventory, 166. Are you able to understand? Yes.
Yes, sir.
Yes, sir.
That's about it. Okay. That's about it. Okay. That takes care of this question. Now, what we will next do is we will work on balance sheet questions which require translation, Okay. Principles are the same what we have studied till now. So there is nothing new that I am advocating. Okay. It is exactly the same. Okay. All right. Infotech Limited, Global Limited, IGL, has a functional currency of dollars and needs to translate its financial statements into the functional and presentation currency of Infotech Inc., which is L dollars. The following balances appear in the books of Infotech Global Limited at the year end prior to translation. Issued capital, opening retained earnings, profit for the year, accounts payable, liabilities, PPE, and receivables. Translate above balances of Infotech Global into L dollar ready for consolidation by Infotech. Share capital and opening retained earnings are to be taken at 30,055 and 15,274 L dollars respectively. Prepare a working of the cumulative balance of FCTR. Relevant exchange rates are given at the beginning of the year, average rate, and end of the year. Are we okay with this? Did you understand the question?
Yes, sir.
Which hand, it is the same thing what you are already aware of. Yes. So now let us have a run through with the solution. So first thing is write all the line items of assets, liabilities, etc. Okay. Now assets, receivables, issued capital, opening retained earnings, profits, accounts payable, accrued liabilities, total. Now, this I will have to convert it using appropriate rates. Yes or no? Yes.
Yes, sir.
So what is my closing rate? Oh, okay.
1.15.
This one issue इसको ना सॉल्यूशन 1.13 दिया है मैंने तो डू वन थिंग शायद वो क्वेश्चन में 1.15 ही होगा बट यू नो आई हैड टेकन 1.13 तो आज के लिए उतना कर लो ओके सो देन योर क्वेश्चन एंड सॉल्यूशन विल बी एट पैरिटी विथ ईच अदर नहीं तो बोलोगे 1.15 किधर गया तो रेट एट द एंड ऑफ द ईयर 1 euro equals 1.13 USD. Okay, so now if I look property receivables, accounts payable, accrued liabilities, are all my closing liabilities at the closing rate
Yes, sir.
and closing assets also. Then issued capital and opening retained earnings, have they given the split? Sorry, my mistake. दूसरा क्वेश्चन लिख रहा था, my bad. कहाँ ध्यान है आदित्य? Okay, fine. Sorry, ये 1.13 ही है. Okay, all right. Now you can see opening share capital and retained earnings are to be taken at 30,055 and 15,274 respectively. So 30,055 and 15,274. This is given to you. Are you able to understand? Yes. And currently we have earned a profit of 20,000. For that, we will be taking the average rate of 1.175. So when I do that, the balancing figure is going to be your FCTR. Is it okay?
Yes, sir.
Now, what they have also asked is prepare a working of the cumulative balance of the FCTR. Acha, why does FCTR happen?
Sir, the rate which we take for the P&L is average rate.
And
And the issuing capital is on opening rate and retained earning is also opening rate. This is given at the opening balances.
so matlab in my entire converted balance sheet, there are only three things which are at different rates. One is issued capital, one is opening reserves, and third is profit for the year. इसके अलावा whatever is there, this will be going at the closing rate. Do you agree with this?
Yes, sir.
So for these three items, if I compare the closing rate for these items versus what I have considered, that should give me the FCTR.
Yes, sir.
Yes or no? So if I look at the interpretation of FCTR or where it is coming from, see, issued capital. If I take it at 1.13, which is the rate, so that comes to 44,248. But yours is only 30,055. Opening retained earnings 24 against 15. And profit for the year 17,699 against 17,021. So therefore the gap is 24,376, which is exactly this number. Are we able to follow?
Yes, sir.
Yes, sir.
बस वही है और कुछ भी नहीं है. So we have translated the balances and prepared a working of the cumulative balance of the foreign currency translation reserve. All right. Any doubts in this question?
No, sir.
No. Okay.
No,
So
sir.
same basis, एक और question है. X has a global functional currency of USD, needs to translate to euros. Following is this. Relevant exchange rates are given. Translate into euros, which is ready for consolidation. Prepare a working of the cumulative balance of FCTR. Can you try this for homework?
Yes, sir.
कुछ है नहीं इसमें.
Yes, sir.
Yes, so please try it for homework. अच्छा. This is something we have already discussed. Goodwill in INR terms was appearing at 5,000, but actually it was $100. I restated to 6,000, increased it by 1,000. So that is what is given here. Any goodwill arising on acquisition of a foreign operation and any fair value adjustments to the carrying amounts arising on the acquisition shall be treated as assets and liabilities of the foreign operations. Are you able to follow? Yes.
Yes, sir.
Hence, they are expressed in the functional currency and should be translated at the closing rate, as is the case for all assets and liabilities. So, therefore, our closing was what do you say? They are expressed in the functional currency. In our case, the closing rate was how much? 60 rupees. That is why we brought it to 60. We're able to recollect, connect the dots.
Yes, sir.
ये देखो 5,000 I did not keep. I made it 6,000. Why? Because 6,000 is what you call 6,000 is your closing rate. 6,000 is your closing rate value. Okay. So that is explained here. Any doubts so far in this slide? No doubts? Okay. I will leave you this for hope. Leave this for you for homework. This you can try after consolidation is done. Okay, try after consolidation gets done. Okay, now all set. Have you understood till now?
Yes, sir.
Yes, sir.
Shabbir, Hemant.
Yes, sir.
Okay, fine, perfect. Now, I hope Usha also follows, Niranjan follows, Mamta follows. Now we come to this question is not there in your study model. Okay, this question we have tried to build it based on the data that we have, the studies that we have undertaken, and this is a full-fledged consolidation question. Okay. So what I am going to run you through is, obviously, if I run you through consolidation, how many of you are comfortable with Ind AS 110 consolidation? I don't expect you to be, right? So therefore, what I will do is I will run you through those items which are impacting me from an Ind AS 21 perspective. Is it okay? Yes.
Okay, sir.
आपसे एक ही रिक्वेस्ट है, आप कंसोलिडेशन खत्म करोगे, इट विल हैपन इन दिसंबर जनवरी मोस्ट लाइकली। उसके बाद कैन यू प्लीज फिल इन द ब्लैंक्स फॉर दिस क्वेश्चन?
Yes, sir.
Yes,
Yes.
sir.
मतलब वो फिलहाल ब्लैंक सारे फिल हो चुके हैं, बट आज क्या है ना, आज योर you are not, you haven't studied, you haven't learned that topic yet. Okay, so there is a blank for that purposes only, and that is why I want you to revisit this after you complete consolidation. I will be doing a limited touch base for this question. I will only explain those parts which pertain to me right now. एक तो मेरे पास कंसोलिडेशन का टाइम नहीं है, दूसरा आप मेथड, आई डोंट नो व्हाट इज द मेथड यू विल लर्न, you use that method and follow, answers will be the same, there won't be any doubt on the answers. Okay, it's just presentations that may differ again, I'm not sure on that. Okay, so let us read this. Bharat Communications acquired 80% of Ceylon Telecom PLC for rupees 10,40,000 when the retained reserves of Ceylon Telecom were rupees 50 lakhs. The financial statements of Bharat and Ceylon Telecom for the year ended December 2006 are as follows. You are having, this is in INR, this is in foreign currency. PPE, investment in Ceylon, current assets, total, share capital, retained earnings. Okay, share capital as well as retained earnings. ठीक है. Statement of financial position continued, loans and other current liabilities. So total comes to 44 lakh 30 and 1.28 crore respectively. P&L, you have revenue, cost of sales, gross profit, other expenses, dividend, profit before tax, income tax expense, and profit or total comprehensive income. In the year ended 31st December 20x5, Ceylon's total comprehensive income was 24 lakhs. On 31st December 20x5, Ceylon Telecom paid dividends of rupees 6,90,000. An impairment test conducted at 31st December 20x6 revealed impairment loss of 2,96,000 relating to Ceylon PLC's goodwill. No impairment loss was previously recognized. It is a group policy to translate impairment losses at the closing date. At the date of acquisition, Bharat Limited chose to measure NCI at the proportionate share of fair value of net assets. We'll come to this point later. Statement of changes in equity, opening balance, dividends paid, total comprehensive, and balance at 31st December. Exchange rates were as follows: opening rate, closing rate, average rate. Prepare consolidated balance sheet, consolidated P&L, and other comprehensive income of the Bharat Group for the year ending 31st December X6. Yes, have you understood the question? All right. Anybody has any doubts here? So please follow.
सर,
Yes.
ये स्टेटमेंट में जो डिविडेंड पेमेंट की अमाउंट दिखाई जा रही है सीलॉन की, वो है 8,10,000 एंड ऑन अर्लियर स्लाइड दैट वाज 6,90,000 आई थिंक.
On 31st December X5,
Okay,
this
year
was
is changed. Okay,
year
sir.
double. Okay, all right, fine. Anything else? You have any doubts? So let me move, let me take you ahead. Okay, ये वही question है. Okay, so now prepare consolidated balance sheet, P&L. Okay, first thing, what are you going to do? You are going to translate the balance sheet of Ceylon Telecom. Is it okay? This translation will happen for the purposes of consolidation. So consolidation के लिए I will take the balance sheet at 31st December X6 and apply the closing rate of 8.1. Is there any doubt in this part?
Sir.
No doubts. Okay. So now you can see property, plant, equipment, current assets, loans, current liabilities, and dividend paid because there is a payment that is happening. So all these things are converted using the closing rate. Have you understood?
Yes, sir.
Yes.
Yes, there is no doubt on this front. Okay, let us then move on to the next. Share capital should be converted using which rate?
Opening rate.
Opening rate or rate on the date of acquisition?
Acquisition rate,
Rate
sir.
on date of acquisition.
Date on the date of acquisition. So it has acquired on 1st January 20x5. Okay. So now
9.4.
9.4. Absolutely. And prepaid earnings also at 9.4. Are we having any doubts here?
No,
No,
sir.
sir.
No doubt, sir.
ठीक है आगे बढ़े. So then it is earning profit in year 20x5. They have given the split, na? In the year ended 20x5, total comprehensive income was S rupees 24
24
lakhs.
lakhs.
And it has paid dividend of S rupees 6 lakh 90. So profits earned 24 lakhs. I have to convert it using what rate? This is profit of
Average
20.
rate.
So average rate of
2005. मतलब 5 to be.
yes. So average of 2005 is 9.1.
9.
Yes. So I have converted using 9.1. Correct? समझ रहा है अपने को?
Yes, sir.
Yes, sir.
And then a dividend has been paid on 31st December X5. So will I use average rate or will I use the rate on the date of transaction?
Date of transaction, closing rate.
Date of transaction. It's not a closing rate. It is rate on the date of transaction. Don't call it as a closing rate because this is the date when there is a cash outflow that is happening. Okay. So that is 8.8. Okay. So 8.8 I used and that has brought it down. Any doubt so far? Yes.
No, sir.
No, sir.
All right. Similarly, profit for 20x6 converted at average rate 3,21,429. Dividend at the closing rate or whatever that is the rate on the date of transaction, which is the right way to talk about it. Okay. So once all these conversions are done, you get the exchange difference on net assets as your balancing figure. Have you understood this so far?
Yes, sir.
Yes. Sure. Anybody has any doubts here? No doubts?
सर
बताइए.
ये 2005 का जो डिविडेंड दिखाया है 690
Yes.
ये 31 दिसंबर 2005 को जो है उन्होंने दिया है एंड द
Yes.
एक्विजिशन इज ऑन 1st जनवरी 2005.
That's right. That's right.
Yes, sir. That's why they are treating that a post acquisition.
हाँ वो हम देखेंगे. I'm not yet going into that. Okay.
Okay. I was a little bit confused that as per my conclusion, it was a pre-acquisition. So I was not paying
नहीं
attention to the dates.
हाँ नहीं वो उसी साल का है in the date of acquisition itself. Okay. So this is the first point that we have done. Okay. Okay. All right. जिसको वो वाला फॉर्मेट पसंद नहीं आया, I have also given alternative presentation in T form balance sheet. Okay. So you can see FCTR is the balancing figure 1,57,205. Is it okay?
Yes, sir.
Yes, sir.
सर
So
इस फॉर्मेट में भी अगर हम आंसर लिखते हैं एग्जाम में तो भी अलाउड है ना?
मिलेगा. मेन आंसर इस फॉर्मेट में मत
Yes,
लिखना.
sir, sir.
Okay. Working notes is okay. All right. Now see, you will be studying consolidation. There are two methods or two formats in which consolidation can happen. It can either happen in this manner, what I am now projecting on the screen, or the consolidation can be done in this manner. Okay, where I prepare cost of control accounts and all. Okay. You can follow any of the methods. My job, because I have not taught you consolidation, I have given you both the answers, both the solutions. Detailed there, all the working notes are there in that. Okay. Your sir, whatever he teaches, please follow the same format and apply it here. Answer khud ba khud aa jayega. Okay. You will get the same answer. There won't be any problem in that. But I don't know what process they will follow. So I gave both the opportunity, both the methods. Okay. So that is done. All right. Now let us come to, so one part I explained to you, that is FCTR calculation, right? Closing balance sheet, I have converted to the applicable, at the applicable rates and arrived at FCTR. Now we will come on to the cost of control, that is goodwill. Acha, what Ind AS 21 tells, I have to calculate the goodwill in the foreign currency, or should I calculate it in the functional currency?
Foreign currency. If the
And then I
acquisition
have to convert using which rate?
closing rate.
Using the closing rate. Itna yaad rakho. Okay. Now, for Bharat Communications, it has acquired 80% of Ceylon for rupees 10 lakh 40. 10 lakh 40, is it functional currency or is it foreign currency?
So it's a functional currency, I
It's
think.
the functional currency of this entity. Okay. So therefore, I will have to convert it into the foreign currency on the date of transaction. So on 1st January 20x5, the rate is 9.4. The rate is 9.4. Is it okay? Yes.
Yes, sir.
ठीक है तो बस इतना सा याद रखो, just remember this, and then we shall come to the question. See, cost of control, investment in Ceylon, it was 10 lakh 40,000 in functional currency. I applied the rate of 9.4. So in foreign currency, I have paid 97 lakh 76,000. Have you understood this? Yes. Pooja,
Yes.
Monica,
Yes.
समझ में आ गया? Yes. Now what happens is, first you do all the calculations in the foreign currency. 80% of share capital. So 80% into S rupees 20 lakhs, because my share capital is 20 lakhs, right? Share capital देखो 20 lakh rupees. Yes or no? Yes.
Sir, the investment in rupee term is 10 lakhs 40,000. We have to divide it by 9.4, na?
Divide or multiply?
तो रुपी टर्म में ही है तो
आप एक्सचेंज रेट देखो ना, श्रीलंका S rupees to rupee 1.
ओके सर, गॉट इट सर.
तो मल्टीप्लाई करोगे आप. ओके, ऑल राइट. So 10 lakh 40 into 9.4, 97 lakh 76,000. Equity share capital 16 lakhs. That is 80% of 20 lakhs. What is 20 lakhs? 20 lakhs is my share capital. Have you understood this?
Yes, sir.
Jeannie, did you follow? Monica, did
Yes,
you?
sir.
Hemant, did you follow? Yes, all right. Shabbir, I hope you followed. And finally, pre-acquisition reserves. Pre-acquisition reserves कितना है आपका?
So 50 lakhs था शायद रिटेन अर्निंग का
Yes,
बैलेंस.
when the retained earnings was S rupees 50 lakhs. So that is 50 lakhs, but we are acquiring only an 80% stake.
80%.
This I will convert using the rate on the date of acquisition. So that is the INR amount. Okay. And then you get goodwill 41 lakh 76,000. This I will convert using the closing rate. Why? Because what Ind AS 21 requires, Ind AS 21 tells us that goodwill must appear at the closing rate. You remember in that question, 5,000, I made it 6,000 and took the difference to FCTR. याद है?
Yes.
Yes, that is exactly what I am doing here. I calculate the goodwill in foreign currency, convert it to INR using the closing rate. Obviously, it won't match because this rate is different from 1, 2, 3, all these three rates. And therefore, there will be a balance. This balance is going to my FCTR. Are you able to understand?
Yes.
Yes.
And then if you see the next year, 20x6, again, goodwill is taken as 41,76,000 only. Goodwill ka foreign currency amount is not changing, but it is changing in INR because of change in exchange rate. So where does that difference go? That difference goes to FCTR. Are you able to understand this? Yes.
Yes, sir.
Sir.
So year after year, the goodwill in foreign currency remains the same, but it is restated at the closing rate, and therefore the movement will be taken to FCTR. Is it okay? Yes.
Yes.
Yes, sir.
बस इसके आगे whatever is there is consolidation chapter. Okay, my hand holding was there up till here for you. After that, impairment loss of goodwill, partial goodwill, full goodwill, NCI calculation, and then pre and post. All these things I want you to try after you finish your questions on consolidation. Is it okay? Yes.
सर फिर बाद में ये जो FCTR है ये प्रॉफिट एंड लॉस में चला जाएगा ना
नहीं
लास्ट
नहीं नहीं, this will be a
OCI.
FCTR item. It will come through OCI, and from OCI
Okay,
it
okay.
will go to
Yes, sir.
FCTR.
Yes, sir. OCI.
So you can look at the consolidated statement of financial position. If you look at the other equity, you can see consolidated FCTR. Okay.
Yes, sir. Yes, sir.
It will
Clear.
continue as a single item. Okay. All right.
Okay.
Fine.
Thank you,
So
sir.
my only point is do this question after consolidation. Don't miss it out. Okay. Don't miss it out. You don't have this question in the study module. Okay. आपके पास ये क्वेश्चन नहीं है स्टडी मॉड्यूल के कौन से भी एडिशन में यू डोंट हैव अ फुल फ्लेजेड फॉरेन सब्सिडियरी क्वेश्चन. ओके, दैट इज व्हाई इट इज वेरी इंपॉर्टेंट.
तो कंसोलिडेशन चैप्टर में भी नहीं है ऐसा?
नहीं है बिकॉज
Okay.
उसमें इतने सारे क्वेश्चंस है. देयर आर सो मेनी थिंग्स दैट इज देयर इन कंसोलिडेशन दैट they did not put this, and it was not required to be put there because the principles are in Ind AS 21.
Yes, sir.
If they put this in that, then students will start asking to Ind AS 21 ये rate क्यों लिया, वो rate क्यों लिया. That would be the questions which would come. Today you know this because tomorrow when you do consolidation and revisit this, then you will have a full understanding. Okay. So when I meet you after your financial instruments and consolidation, I will ask you whether you did this question or not. तो याद रखना, मुझे याद रहेगा.
Yes, sir.
All right. So that for this I leave it here. Obviously, I am not able to close that. Give me another 5-10 minutes. I will be able to just wrap up the topic. So again, disposal of foreign operations. Reduction in an entity's ownership interest. So this also you please follow up once you complete your consolidation, because there is a stake sale which is a separate topic under consolidation. So because of stake sale, you may end up losing your control. You may end up losing control and maintaining a significant influence. You may end up losing the entire stake itself. That point of time, what will happen to the goodwill, what will happen to the reserves, all that is coming as part of consolidation. So this part I will leave it as of now. Okay, I will leave it as of now. Okay, all right. Only thing what you have to remember is any balance that relates to the cumulative amount of exchange differences shall be reclassified from equity to profit or loss. This I told you. Because now the FCTR is no longer a paper reserve. Now you are actually realized it. So once you dispose of that foreign operation, whatever balance is there in the FCTR, what are you going to do with that? You will bring it to the
P&L.
P&L. That is the one thing that you will have to not forget. Okay, all right, fine. So ठीक है. NCIs and all, once you study that, I will leave it at that point of time. Okay. अच्छा. Can functional currency change? Ideally, no. Ideally, it cannot change. But if there is a change in the relevant underlying transactions, events, and conditions, in that rare circumstances, your functional currency can change. If the circumstances change and a change in functional currency is appropriate, then that change is accounted for prospectively from the date of change. Okay. So you can just go through this. Theory है, ज़्यादा कुछ नहीं है. Okay. The choice of present. Okay. Now coming to the next one. Since entities prefer to present financial statements in their functional currency, a change in functional currency may be accompanied by a change in the presentation currency. The choice of presentation currency is an accounting policy. I told you what is a presentation currency yesterday. And any change should be applied retrospectively in line with Ind AS 8. This means that the change should be treated as if the new presentation currency was always the entity's presentation currency, with the comparative amounts being restated. Okay, so these are all the disclosures. You can go through this. Okay, most of it is what you already know. Okay, all right. Coming to this one minute. Let me just run you through a couple of slides which, there is one NIFO which I need to do with you. Okay, fine, just a minute. I completed functional. Okay, all right. Okay. Usage of presentation currency other than functional currency. These principles are same like what we do for conversion of foreign operations. So assets, liabilities at closing rate, results at spot rate, results at spot rate or at average rates, and finally just at foreign currency, results at average rates, all other resulting exchange differences recognized in other comprehensive income. Okay, so that takes care of this. Hyperinflationary, you can just read this. This is the change that is there. You don't have a standard on hyperinflationary economy for your syllabus. So that is just put in as an information. Okay. All right, fine. Coming to the last part, that is net investment in a foreign operation. Just 5 minutes to close this and then we are done. Okay, net investment in foreign operation. Okay, what we call as NIFO. Okay, see what happens is your investment in share capital, investment in the subsidiary shares, is it of a permanence or is it temporary? When you incorporate a subsidiary, your nature of investment would more likely be more than 1 year, right? So there is a degree of permanence attached to that investment. Are you able to follow? Yes?
Yes.
Yes,
So
sir.
therefore, the translation rates are different. We take the rates at the time when the investment was made or when the shares were acquired. Why? Because there is a permanence to that transaction. Many times what happens, companies will not want to set up a subsidiary in foreign countries. Why? Because that would entail a huge amount of investment. You need to know those laws. You need to hire somebody. You need to ensure they do the transactions. You need to do the compliances. So they say, I don't want any of this. I'll set up a branch office. Share capital के तौर पे I'll just give a money amount there. I will not do the allotment and all those formalities. So I will just go and give a loan to that particular entity, and this loan will be repayable at the wish of the borrower. Okay, that means उसके पास पैसे हैं तो वो देगा, नहीं है तो नहीं दिया तो भी चलेगा. So tell me one thing, is there a permanence associated with this investment also? It is just that the form has changed, right? It is just that the form has changed. In subsidiaries, investment is in equity share capital. So permanence gets established. Permanence gets established. But uh, in foreign operations, investment is a monetary amount with no repayment conditions. No repayment conditions. Tell me one thing, if there are no repayment conditions, can I say that there is a degree of permanence to my investment? Okay. Let me put it another way. आपने पैसे इन्वेस्ट किया, you have put your money to your subsidiary. You have given money to your subsidiary for funding its operations. Do you expect that money to come back to you? Your subsidiary is newly incorporated. You put the money in the subsidiary. Subsidiary carries on the operations. Do you expect that money to come back to you? Answer is no. You can tell, yaar, wo mere paas rahe or it remains with the subsidiary. It hardly matters. What matters is the fact that I have made an investment in my subsidiary. Only thing is, it is not a conventional investment where I got the shares, but it is an investment where I have done a cash contribution with no repayment expectations. Similarly, in this case, I make an investment in a foreign operation and I give some cash there, some $5 lakh or something, and I tell you, carry on the business with this money. I don't expect this money from you. So are you establishing a permanence to that 5 lakhs? Answer is yes. When I say establishing permanence, it means you want that operation to carry on its business. You want that operation to become a going concern. You want that operation to generate the profits. You want those profits to get back to you in some point, at some point of time or the other. But you do not want this money back in the form of a loan repayment. Are you able to understand? So
Yes, sir.
this becomes a monetary item. You have given a loan, but this is a loan where you are not expecting a repayment. It is like an unsecured loan you can take. So this we call it as a monetary item, which is a part of net investment in foreign operation, which is a part of net investment in foreign operation. Okay. See, ideally, if I had to make investment in equity shares, then I would do the conversion. The difference on account of converting the foreign branch trial balance the foreign subsidiary trial balance would sit as part of your FCTR. If it was regarded as a regular monetary item where I gave the money and I expect it to be paid back, the exchange rate fluctuations would go and sit in the P&L, would go and sit in the P&L. But now you are able to understand this. See, I give a loan to a foreign operation. Not NIFO, a regular loan. So where will the foreign currency fluctuations go and sit? This will go and sit in the profit and loss because you do the restatement at the balance sheet date. You very much expect the repayment. So this differences will go and sit in the P&L. If it is investment in subsidiary, the difference taken to FCTR. This is on translation of trial balance. This difference goes to FCTR. Okay. And finally, we have a third category now. There is a loan that is a monetary item, but in the nature of net investment in foreign operation. In the nature of net investment in foreign operation. What are you going to do? Exchange rate fluctuations. Initially booked in P&L, reclassified to FCTI. That's about it. Okay. Are you able to understand why we are doing this? Because this is case one. I expect the money to come back. So it is a regular foreign currency transaction. I take the exchange differences to the P&L. Because this is a transaction, I'll get the money back. Second case, I put it in a foreign subsidiary. They do the translation. The difference goes and sits in FCTR because I expect the operations to run and I can only realize when I dispose of the branch of the subsidiary. So therefore, it goes and sits in FCTR, reclassified to P&L when I dispose of the subsidiary. Third case, I have given a loan, but there is no repayment terms or no settlement terms. So in effect, is it a loan? Answer is no. It's in effect not a loan. It is only a transaction where you have made an investment, but it is in the color of a loan. So I will not call it as a loan. I call it as a net investment in foreign operation. So here your foreign currency fluctuations go and sit in the P&L, but those items you will be reclassifying it to FCTR because ultimately this is in the nature of a net investment in foreign operation. Are you able to understand? Yes?
Yes, sir.
समझ में आ गया? Too many heavy things after today's break. Maybe you can watch the session a little later and then, come to terms with it. Okay. So when I look at
Earlier, it is a bit confusing about NIFO, but these three transactions you have written, now it get clear everything.
ठीक है तो चलो अच्छा है सो नाउ अगर हम आगे बात करेंगे अबाउट नीफो सो यू कैन जस्ट हैव अ लुक एट द थियरी दैट इज देयर हियर why did I come to this नीफो कहाँ चला गया intra-group balances we eliminate, exchange differences not eliminated. I have told you. Okay, all right. Now here it is net investment in foreign operation. Exchange difference on monetary items. The loan that is given, if it is not a part of net investment in foreign operation, it is a regular loan for which you get the money back. That will be recognized in profit and loss. But if it is a part of net investment in foreign operations, you don't expect this money to come back. It is a permanent category of investment which you have made. You recognize it in OCI and accumulate it in a separate component of equity, that is FCTR, until the disposal of the foreign operation. So exactly what I have explained to you. And finally, let me just see. Yes. All right. So net investment in foreign operation, an item for which settlement is neither planned nor likely to occur in the foreseeable future. You don't expect the money to come. So we call it as a part of net investment in foreign operations. Example, short-term loan getting rolled over continuously. Okay. So that it has the effect as that of a capital contribution or long-term receivables or loans. An item and the other one is intra-group balances. Settlement is planned or likely to occur. So these differences we will be taking it to the P&L. Example, trade receivables or payables. Problem is audit. This is at the management discretion. So you need to evaluate and look at all the factors before coming into a conclusion on whether it is a NIFO. Okay. All right. Okay. So that's it. Exchange differences in financial statements where foreign operation is consolidated, take it to other comprehensive income, FCTR, and then you reclassify from equity to P&L on disposal of a foreign operation. Okay. Separate financial statements, you can see where it appears. Exchange differences in P&L of foreign operations individual financials, reporting entities, ठीक है. This is easy. Okay. So with that, I think we are almost done. A last question, I leave this to you for homework. Okay. You do this question first and then read up this appendix B. It's simple. What happens here is you are paid an advance for goods procurement, or you have received an advance for revenue. What exchange rates should be used for calculating the advance and booking the revenue? Okay, so that's the only thing which is there here. Do this question for homework and then we are pretty much sorted out with the standard. Okay, I'm sorry I extended by about half an hour, but today was the only day that was left. Next day after tomorrow, we start up with a fresh standard. So we shall continue it separately. Okay, any doubts so far?
No, sir.
No? Okay. So with that, we conclude. I think quite a number of students left also. Okay. All right. Fine. That's it.
Yes, sir.
So see you. Then see you day after tomorrow. I think we have income taxes as the next one. Okay. All right.
Okay.
Then. Thanks. See you day after.
Thank you, sir.
Thank you. Thanks.
Thank you, sir.
Thank you. Thank you. Thanks, Monica. Thank you. Thanks. Over. Thanks, Ginny. Thanks, everyone. Thank you.